London with Tom McKenzie. He's back.
I am back, and here are your top stories. Sentiment restrained, stocks in the red as investors look ahead to Jackson Hole. China, meanwhile, cutting its benchmark lending rate to support that beleaguered economy. The Credit Suisse shuffle, the embattled Swiss lender, brings in a new finance chief, pushing ahead with its major revamp. Plus, summer of discontent. Strikes at the UK's biggest container ports are set to upend supply chains. We are live on the ground in Felixstowe.
Yeah, the number of messages I've gotten, Tom, from a lot of French people saying, the English, they strike more than us. I know it's not funny, but it's something that we can joke around a little bit. All right, the futures, I think if we have the futures up, again, undecided, it's a big week, not only for energy prices because of Ofgem here in the UK, but a huge week because of Jackson Hole. All eyes, all ears on Jay Powell on Friday.
Jay Powell on Friday, of course, that run-up we've seen in stocks, taking a bit of a breather last week, a pause, or are we at the end of this summer rally? Gains, of course, around 15% since June on US equities. As we look ahead to whether or not Jay Powell is going to reset those expectations on Friday, the market's currently divided, it seems, on whether you get 50 or 75 basis points from the Fed, Jay Powell, the FOMC, come September. The futures, of course, had pointed low. This is what's being reflected in the first few seconds. The Spanish IBEX currently down at 0.7%. The CAC count in similar territory as well. The FTSE 100 currently down 0.5%. Worth reminding viewers as well that you did get those cuts on the one-year loan prime rate and the 5-year over in China as well. Let's switch on and see how things are playing out across these assets. The cuts were deeper in China when it comes to the 5-year. That is the benchmark that underpins a lot of mortgages at a time, of course, of continued pressure on the real estate sector in that economy. Futures in the US currently pointing to losses of 0.6%. The US 2-year, you're seeing a pickup in yield just by 1 basis point. It was a little bit more pronounced earlier in the session, currently at 3.24. The context is you started the year at 75 basis points on the 2-year, now at 3.24. Are we starting to see this top out, or will you see further upside in yields on the back of what we heard from Jay Powell? Bitcoin currently at 21,347. I believe Mark Cudmore is going to be breaking down this story for us, crossing below what many people see as a key line, 22,500 or so, currently down by 0.6%. And then gas prices once again in focus, and you've seen a sharp tick up here in Europe, 10% today, a further pickup in terms of pricing around gas, all the implications for the economies of, for example, Germany, and the economy minister coming out there saying he expects further constraints in terms of those flows from Russia to that German economy. Fran.
Tom, this is a picture for the sector, so we're seeing quite a lot of red. Again, they're not huge losses, but they're losses enough. It is also symptomatic of what we're seeing in August, but it's really basic resources, pretty much unchanged. And then the biggest falls we're seeing from chemicals, but also technology and energy. It's a little bit of a whipsaw. This is actually not, year to date, it'll be interesting to see energy, one of the biggest gainers, but today's trading session means that they're losing more than others. Okay, we have a great chart. It's not the chart that our managing editor for Bloomberg MLive, Mark Corbin, was looking at. Because, Mark, I love the fact that it's Jackson Hole week and you're looking at crypto and Bitcoin.
Yes, good morning, Fran. I am indeed. It's not the chart that's on my screen right now, which is providing a little bit of a catch, but the reason I'm looking at crypto at the moment is because of course, we are seeing tightening coming into Jackson Hole as people anticipate the hawkish message, and that is making it more expensive to speculate on assets that don't yield anything and are potentially just a bit of a lottery ticket, and crypto is, of course, the definition of that. Now, the reason I look at that is because it has kind of preempted some of the broader moves in the US tech sector, which is then also also dominated the overall US stock sector. So crypto started rallying a couple of months ago, preempting the bear market rally in stocks. And just over a week ago, it kind of peaked out, or about a week ago. Again, a day or two before the turn in US stocks. And it suddenly started accelerating lower at the end of last week. On Friday was the really big collapse. We broke out of the trend line that started a couple of months ago. Now we've got this support at 20,730, and that's the next big breakdown level. I think if we go down there, we might be revisiting the lows of the year. Now, the reason I highlight this is not just because of Jackson Hole and the broader sentiment. It's also this move in crypto was led by Ethereum. And the reason I showed the Bitcoin chart, though, is because there's been such decimation in the crypto sector that really Ethereum only has less than 200 billion market cap left. Bitcoin still has more than 400 billion market cap left. Basically, most crypto coins are no longer being as relevant for the financial sector as they once were, and we're back to looking at just Bitcoin. Now, the reason it was led, though, by Ethereum is because there's been a lot of excitement for the last number of years about something called the merge that's happening in Ethereum, as it moves from proof of work to proof of stake, and therefore reducing the dependence on energy usage for operating it and making it supposedly much more efficient. People really think this might be the breakthrough sector for the crypto community, and many people thought it was a kind of a buy the rumor, sell the fact event, and that was really driving the gains in Ethereum recently. Well, now, less than a month before the merge is meant to happen, we are seeing Ethereum completely collapse. That's dragging the whole sector down. Bitcoin is very close to that very, very important level of 20,700. Below there, I think it might be a real sentiment hit to retail investors and drag on the broader stock market.
Not much of a surge from the merge then. Bloomberg M Live managing editor Mark Cudmore on Ether. Currently, by the way, trading at 1583. Bitcoin at 21,340. Thank you very much indeed. Let's get into some more what is driving these markets then as we look ahead, of course, as we said, to Jackson Hole at the gathering later this week. That speech, of course, from Jay Powell on Friday. Joining us is Esti Dweck, CIO of Flowbank, and Phil Serafino, Bloomberg's senior editor for EMEA Equities. Phil, let's start with you. The catalysts for these stock markets as we look ahead to that speech on Friday. Are we expecting range-bound action across these markets in anticipation of more clarity from Jay Powell?
Yeah, I think the market really is in a holding pattern at this point. You know, you've had this big rally from the bottom in mid-June, and now I think investors need to see some evidence of whether that optimism is well placed. You know, the conventional wisdom is earnings are holding up pretty well, no sign the economy's in a recession. Now the question is, does the Fed keep ratcheting up rates so much that it does, in fact, raise the risk of a recession down the road? At this point, investors are pretty optimistic, but they absolutely want to hear from the Fed at the Jackson Hole meeting. And then in early September, there's going to be key economic data on jobs and inflation. And that's really what's going to drive the market.
Esti, what are you expecting from Jay Powell this week?
I think there's a little bit too much expectation that he might sound more dovish than he has recently. The minutes of the last meeting were interpreted as a little bit more dovish just because there was this acknowledgement that the Fed is going to look at the impact of all the rate hikes they've already done on the economy. And we know there's at least a sort of 3 to 6 month lag before you have that impact. So I think the risk at the moment is that he is on the more hawkish side. I think the Fed wants to reemphasize that they are not done hiking. This pivot that we've been hearing about isn't so much a pivot as maybe just going back to more normal hikes. And I think we are on that way, and we are past the most aggressive part of the tightening cycle. But he could sound a little more hawkish, yep. And they definitely want to continue to anchor those long-term inflation expectations.
And Phil, the rhetoric, of course, from officials from the Fed in the last few days has kind of pointed in that direction to a kind of reiteration of this aggressive approach in terms of tackling inflation, getting back down to 2%. If we do get a steer in terms of 75 basis points in September, and of course with all the conditionality with that extra data that's got to come through, what would that mean in terms of the broader markets, both bonds and equities at this point? Is there more to go, particularly when it comes to corporate bonds and the fixed income space?
Yeah, I mean, absolutely. The market is set up, certainly on the equity side, the market is set up for a pretty dovish take on the economy from the Fed and for the next few months. You know, since the low, the things that have been leading the stock market up have been like automakers, retailers, cruise lines, casinos, not the kind of things that would do well in a recession. So it seems like the market is set up for good news on the economy and from the Fed. And to the extent they don't get that, prices could go lower. You know, in in the corporate bond market, it's sort of a similar take. Certainly the more speculative parts of the market would be vulnerable if the Fed all of a sudden indicated or reiterated that it's going to keep raising rates.
But Phil, at the same time, we had a pretty, upbeat earnings season. Does it all come crashing down in the next quarter?
I mean, the problem with the earnings season is that's backward looking, or it's a snapshot in time, and estimates could start coming down rapidly if the situation deteriorates. There's a school of thought that given the lag between Fed policy and when it has an impact on the economy, that the market or the economy could already be heading into a recession, and we just don't know it yet. So, yeah, the earnings were great. People took comfort in the fact that it could have been much worse. But again, that was a snapshot in time, and so that's not much comfort for the next 6 to 12 months.
Esty, do we draw comfort? Do we take comfort from what you say is starting to look now like a disinflationary environment, at least the start of disinflation, which is a bold call?
Well, that's really what the market has been hoping for, and we're starting to see those signals. We see used car prices coming down. We see food prices starting to come down. We see airfare prices starting to come down. Hotels, not yet so much, but we are getting to the end of summer. We know that there's been broadly an improvement in some of the supply chains. So we are at the start of disinflation now. How quickly it goes is the big question. How patient the Fed can be is another one. Now, keep in mind, those year-on-year figures will not reflect the last couple of months change in price yet. So you have to keep an eye on the monthly moves as well, and at the broad trend that is starting to go downward. So that's a lot of what the market is hoping for. A couple of big data points in early September. So the Fed is certainly going to wait for those before the next meeting. But at the moment, it is starting to feel a little bit more encouraging.
Okay, a little bit more encouraging. I mean, I feel like I'm really devil's advocate, Phil. Like, save me from my doom and gloom. The concern is that, of course, we haven't fully priced in any of the secondary effects of this energy. If you're any company that makes anything, and your energy price and your energy consumption and how much you pay goes up by 50%, I mean, this is a huge, huge second round effect.
Yeah, but I think investors have seen that already, and there's a hope that the energy prices have peaked and are starting to come down a little bit, and so people are sort of looking through that. Whether that's justified, we don't know. I mean, Europe is certainly setting up for a difficult winter when it comes to energy prices, so that is a big risk.
All right, well, thank you so much. Our senior editor, Phil Serafino, and staying with us, Esty Dweck, Chief Investment Officer at Flowbank, and we'll ask her a similar question as well. Up next, Chinese banks lower their benchmark rates for the first time in months and step up support for the property market. So we'll get the latest on China's economy next. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Bloomberg Green, bringing you the business, data, and innovators fighting climate change.
Reinventing climate news on TV, Quick Take, and Bloomberg.com.
Welcome back to the Open, everyone. 13 minutes into the European trading day. It is August, but we're feeling a little bit of pressure, of course, all eyes, all ears, I should say, on Fridays at Jackson Hole. This will be the time where Jay Powell could maybe reset the markets. A lot of focus on whether he remains very bullish on inflation and says, I will fight it at any cost. The DAX down 0.4%. It's also a big week here for the FTSE 100, as I think later in the week we find out the limit at which Ofgem can put hikes for energy.
It's interesting, isn't it, talking about sterling and the pound and how that links into what's happening with the energy crisis here in the UK, and analyst strategists increasingly saying that it's trading like an emerging market currency. So we continue to watch that. Despite the expectation of further hikes from BOE, you're getting continued softness on the pound. I just think that story is pretty fascinating when you put that into place alongside the political story here as well. Switching focus now to China, what's happening in terms of the economic support that's been coming through from Beijing. China's seeking to stabilize, of course, its property market as the economy continues to struggle. Banks have lowered their benchmark lending rates by both the 1-year and the 5-year, and authorities are stepping up support with additional loans. Let's get more then from Bloomberg Chief Asia Economics Correspondent Enda Curran out of Hong Kong. Enda, how far do these measures go then in really firming up China's economy at a time when the credit data suggests that maybe the demand isn't even there for cheaper financing?
Well, we had two new developments, Tom. So on the one side, like you mentioned, we've seen that cut to interest rates by the lenders, the 5-year mortgage rate, or the 5-year rate coming down by 15 basis points, more than expected. That's the key one for mortgages. So that will definitely bring down the cost of borrowing. And on the other side, we have the authorities talking about getting financing or loans through to those developers who need that money to ensure they finish the developments that they've ran into trouble over. So it is a sign of more support for the real estate sector. It does bring down the cost of borrowing, and it does indicate, of course, more urgency among the authorities. But is all of this going to be enough for, or something of a game changer to turn around the whole economy? That's unlikely, because as you mentioned, the problem in China has not been either the cost of borrowing or the amount of liquidity that's available to borrow. It's been all about suppressed animal spirits, and those spirits are down because of the ongoing real estate slump and because of the rolling restrictions linked to controlling COVID. So it is another step to support the economy, but nobody's saying that this in and of itself will turn things around.
Yeah, so basically investors also saying, look, it's not enough, you have to do more.
Yeah, that's the idea, Francine. And it's expected that more support will come, especially, I think, on the government spending, on the fiscal side of things, among infrastructure spending, for example, at provincial government level. We've been reporting in recent weeks, my colleagues in Beijing, about the accelerated pickup in spending there. Authorities being told to get on with spending the quota that's been allocated to them. So that's where you're probably going to see most of the action. We're not going to see a dramatic turnaround, it's expected at least, in the demand for new loans or new credit. We continue to have downgrades by big investment houses to their growth outlook for China. So we're in a period whereby, July and August were meant to be a period where China's economy not just stabilized, but actually accelerated. Instead, all the indications are that the downturn continues to worsen from here. So there's plenty of work for policy to do between now and the end of the year.
Enda, thanks so much. As always, Enda Curran, our Chief Asia Economics Correspondent. Now back with us, Esti Dweck, Chief Investment Officer of Flowbank. Esti, how much do policymakers in China need to do to actually get it right, and what does it mean for investors?
Well, there's a lot more work that needs to be done to boost growth. We know that the stimulus measures they've done have been small. We know they don't want to do any kind of stimulus like the US or Europe did during COVID or even during 2008. They're very worried about the consequences. The problem is really, at the moment, the property market. Other areas are okay, but that demand isn't picking up. And the COVID restrictions are really weighing on sentiment. People don't know if and when they're going to be locked down again. They don't feel like going out and shopping as much or buying. So I think we're going to need much more support from policymakers to boost that sentiment for growth.
Esti, what does that mean for your exposure to China at this point?
We're still a little bit cautious. We think that as long as you don't have mass lockdowns like the Shanghai one, especially in key cities like the Spring, that's one factor we absolutely need. And as long as we don't see a renewed regulatory crackdown on big tech, that's another support. So I think the worst of both of those is behind us. But we do have that growth question and that risk that growth continues to disappoint. Maybe some of those Taiwan consequences still weighing on sentiment as well. So I'd say cautious approach still for China.
Yeah, from regulation to the geopolitical risks and the question marks over growth. Thank you. Esti Duet, views on there. On China, of course, previously on the segment, of course, looking ahead to that Jackson Hole speech from Jay Powell, what it may mean for these equity markets. CIO of Flowbank. Coming up, we're going to focus on Credit Suisse as the bank names a new CFO. And staff are anticipating deep cuts from the latest emergency restructuring. We focus in on the troubled Swiss lender next, bring you the details. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Welcome back to the Open. Happy Monday, 22 minutes into your European trading day. Losses of 0.3% across the benchmark. Futures in the US, S&P E-minis pointing lower by 0.6%. NASDAQ futures close lower now, currently by around 0.8%. Let's check in on some of the individual movers. We'll be talking about the macro, of course, looking ahead to Jay Powell, of course, that speech at Jackson Hole on Friday. But in terms of the individual corporate names, some intriguing stories coming through. Cineworld, which is the world's second largest operator of cinemas, confirming reports from Wall Street Journal last week that they are looking at bankruptcy filing in the US. That led to an 80% drop drop in the share price last week, currently down 3%. Cineworld, Vodafone confirming they're looking to sell or have agreed to sell their business in Hungary for around $1.8 billion, currently gaining 0.3%. A simplification of that telecoms business is the drive from the CEO. And Credit Suisse, of course, the story that we're going to unpack shortly, down currently 1% on news that they have announced a new CFO who will be taking over in the next couple of months as part of Kerner's reshuffle, of course, at that troubled lender. Francie.
Yeah, it's today's big take. Credit Suisse staff at the Swiss bank are anticipating deep cuts from the latest emergency restructure as the lender gives up its ambitions to be a titan of Wall Street. Now, we spoke to David Harrow of Harris Associates, who has about 10% of Credit Suisse. We talked on Friday.
The last 10 years certainly have been bad, very bad for the bank, but you look at the situation today, trades at less than a third of book value.
No.
It still has a robust private wealth business. All they have to do is prevent the investment bank from losing money and get it back to some sort of growth.
Now, from Zurich, joining us now for more is Bloomberg's Miriam Balazo. Miriam, good morning. So how big of a shakeup of the investment bank are we actually expecting?
It could be as drastic as two-thirds of the investment bank being torched, actually, Francine. That's the extreme scenario that was mentioned to us. But obviously, the bank has announced that they would want to also restructure their securitized product business, which is a beautiful business, a business that's doing really well. But then there are other parts of the business of the investment bank that's struggling, and it's still unclear what's going to be sold, carved out, or just shrunk. But one thing's for sure is that the M&A advisory team is still at the core and the essence of Credit Suisse. So that's one area where we think is likely to kind of survive the shakeup. But I think we can brace ourselves for some drastic change.
So Miriam, the M&A team looks safe for now, but as you say, potentially, two-thirds of the investment banking business, as you described it, being torched. What is the time frame that we're looking at for this?
So still to be decided. However, the bank indicated that by Q3 this year, by October this year, they should have some sort of a clearer structure or plan as to where the direction will be heading towards. So they're actually working at very, fast pace, because September's around the corner, and it's just going to be 2 months, and then we'll have a bit of a clearer vision of and clarity around what's going to be disposed of or divested.
Okay, Bloomberg's Miriam Balazo, of course, on Credit Suisse and these restructuring plans on a day, of course, when we had the new CFO being announced for that troubled lender. You can read more online or on the terminal by typing in NI Big Take Go for all the details of that unfolding reshuffle and restructuring at the bank. Some great insights, great reporting there, so do have a look. Coming up, extreme hot weather in Europe is drying up rivers. We've been discussing this, killing crops, worsening the energy crisis, and forcing governments to enforce water restrictions. We're going to get the latest next. We're going to drill into what's happening around the water sector here in the UK. The markets, you're currently looking at the benchmark here in Europe, down 0.4%. Something of a holding pattern, as has been described. If we look ahead to Jay Powell at Jackson Hole next week, of course, stocks US stateside have gained over the summer. They took a bit of a breather last week. Currently, futures on the S&P looking lower by 0.7%. They've moved lower even further on the NASDAQ. NASDAQ futures currently down 0.8%. Worth pointing out the single currency, euro-dollar, currently trading at around 1.0015 at a session low. You got further strength in the US dollar, just gaining almost 0.2%. Plenty more coming up. Stay with us. This is Bloomberg.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put, you know, your entire savings in just a couple of companies. So the mutual fund was created to give a diversified expert management at a reasonable price. Today, we have a phenomenon where companies are waiting much longer to go public. And so in 2000, the average company went public after 3 years. Now, companies are waiting 9 to 10 years because there's so much money available in the private markets. As a matter of fact, there are half the number of public companies that there were in 2000, and there's 5 times the number of private equity-backed companies. So just from an investable universe, you look at the private markets, and it's you know, significantly bigger. So the question is, that return that used to be captured in the public markets is now captured in the private markets. But the problem, as you know, is you're really tied up for a long time when you invest in a private equity fund. And so trying to figure out a way to solve the same problem my grandfather was trying to solve, which is how do you bring those returns responsibly, the democratization of the private markets to the retail investors. And I describe it as a bit of like running with scissors. Scissors is a great tool if you use it appropriately. And so we're focused on trying to figure out responsibly bringing it in to the average investor.
We have to be able to give our customers vehicles you know, that are their primary vehicles that are EVs, and to be able to do that, we need to have range and infrastructure, and we need to remove the pain points, and so that's what we're doing.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Well, sentiment restrained. Stocks in the red as investors look ahead to Jackson Hole. Will China cut its benchmark lending rate to support the economy? The Credit Suisse reshuffle, or shuffle. The embattled Swiss lender brings in a new finance chief, pushing ahead with its major revamp. Plus, summer of discontent. Well, strikes at the UK's biggest container port are set to upend supply chains. We're live on the ground in Felixstowe. Now, Tom, things are looking kind of sideways on the market. I think they're all waiting for Jay Powell on Friday. And again, they're worried about this economy worldwide not going in the same direction.
Yeah, modest losses that we saw across European equities and US equities last week. Of course, the context is you've seen about a 15% gain on the SPX, of course, the S&P 500 since June. But as Francine, you're saying, of course, something of a whole impacting as we look ahead to see whether we get more clarity from Jay Powell on Friday when he gives that speech near, of course, Grand Teton in Wyoming, of course, at Jackson Hole, and whether or not he clarifies whether they're more focused on 75 basis points come September or 50 basis points, whether he reiterates that determination to get inflation back down to 2%, even as that CPI, of course, gave some market participants some relief. We've got more data coming through before that final decision from the FOMC come September. Interesting to hear from SD Dweck from Flowbank saying that those June lows are likely to prove supportive, even if you do get a further correction. In terms of your sectors, just two that are in the green. They are those sectors where investors certainly move in terms of defensiveness, and that's been characterized in what we're seeing in the markets today. Healthcare currently gaining 0.4%, just a little upside for telecom. We have the news from Vodafone selling down about $1.8 billion worth of assets that they have in Hungary as they try and simplify that business, of course, UK listed. In terms of bottom list, you're looking at auto parts, banks, and chemicals. Autos currently off 1.6%. Last time I looked, 2-year yields as well, stateside, just edging up around 1 basis point. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. In China, the province of Sichuan is extending industrial power cuts as the heat wave persists. Officials say blistering temperatures and surging demand for air conditioning have caused gaps in generation. Companies, including Toyota, have already suspended their operations in the region for several days. The power shortage adds another challenge to companies already contending with the country's COVID-0 strategy. A senior diplomat is reported to say that Russia doesn't see a diplomatic solution to the war in Ukraine and expects a long battle. Moscow, meanwhile, is investigating a car bomb that killed the daughter of a Russian nationalist who had herself been sanctioned by the US and the United Kingdom. The bombing comes ahead of this week's 6-month anniversary of Putin's invasion of Ukraine. It's reported members of the UK's Criminal Bar Association have voted overwhelmingly to begin permanent strike action from next month. Court cases have already been disrupted in the pay dispute by criminal lawyers. A permanent strike could see legal cases postponed or even collapsing. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom Francine.
Laura, thanks so much. Now, extreme hot weather is drying up rivers, killing crops, worsening the energy crisis, and forcing governments to enforce water restrictions. Now, the high temperatures have also exposed flaws in the UK's water system and could make it harder for the country's unpopular privatized utilities to borrow money on the public markets. Well, investors are ready to demand higher yields, especially for providers lagging behind on their leakage targets. Well, joining us with the very latest is Bloomberg's Priscilla Azevedo-Rocha. So, Priscilla, what exactly is happening in the space?
Francine, good morning. So basically right now, London is about to enter a hosepipe ban, or what is called a garden hose ban, and it's following another five water companies in the south of England, where restrictions have either been announced or have been in place. Those restrictions mean that you cannot water your garden, that you cannot wash your car, that you cannot fill up your pool, or you're subject to a £1,000 fine.
How do we get to this point, Priscilla?
So basically, there's two sides to this story, Tom. So in one side, we had an extremely hot summer with temperatures reaching over 40 degrees in London for the first time in history. And that came after a very dry winter and also a very dry spring, which didn't allow river levels to fill up. And and then, after this very, very hot period, and on the other side, we have management issues. The water companies in the UK, they are private institutions. There are loads of them, and they look at different areas. And they have been lagging behind in their leakage KPIs, which means that every day a lot of water is wasted in the system. Thames Water, which is the company responsible for London, says on its webpage that about 24% of its water supply is wasted. So in one side, yeah, I know, right? In one side, you have the companies telling the public to, hey, please watch out your water consumptions. It's very dry. The levels are coming down. But on the other side, you're like, what are you doing to make sure that not that much water is leaked every day?
Yeah, I have to say, Priscilla, I feel like I spent most of my mothering time trying to tell the kids to use less water when they brush their teeth. What are investors in water companies saying?
So basically, water companies in the UK in particular, they follow other companies in the UK that have broadly taken advantage of public markets to issue debt over the past 10 years or so. They've issued loads of bonds, most of them green, sustainable, and they took advantage of this low yields environment. And now, when companies prepare to return to bond markets in September, everyone is going to have to pay up a bit, right? It's not only water companies, because we're in this hiking cycle from central banks, and the Bank of England is making the cost of raising money more expensive for companies. But water companies in particular, the bad headlines are going to put them even more under scrutiny, because investors are going to ask, why are you lagging behind? They're going to ask, what are you doing to address your corporate governance issues, your social issues? So there is also ESG concerns linked to this.
All right, thank you so much, Bloomberg's Priscilla Azevedo-Rocha there, who is the lead reporter on the story. Now we're joined by Graham Taylor, Senior Vice President for Infrastructure and Utilities at Moody's. Graham, great to have you on the program. Look, you talk about the perception of poor performance amongst water companies. I mean, I have to say, the leakage is outrageous. Is it time to nationalize them?
It does sound that way. 24%, Thames is at the upper end, but across the UK, it's, say, 20% or on average. But there's a couple of things to bear in mind there. One, that's not out of line with global averages. France is 20%, Ireland is closer to 40%.
But it doesn't make it acceptable.
No, but you have to remember that we're not talking about an oil leak. We're not talking about methane leaking. We're talking about something that goes into the environment. And so there is a economic as well as an environmental trade-off between the work involved in digging up roads and replacing lots of pipes, or allowing water to recirculate into the environment that way. And it's a totally legitimate question, and when and this is the first hosepipe ban in a decade, we have water shortages. I think clearly at that point we would really wish that less water was leaking into the environment and more was going to households. But I think there's a real trade-off between the costs of doing that work and the environmental impact of doing that work, and the benefits that you get in times like this.
Graham, you have the leakages, and we were talking about that 25% from Thames Water. And then you have the sewage, the question of sewage as well. Recent reports that, 9 million hours over the last 6 years, sewage pumped into British Ocean. So you have the leakages, the sewage, you have the very high compensation from the men and women who lead these companies. It isn't some leftist fantasy, is it, that a nationalisation of these companies should be considered? The regulatory risks are becoming more potent, surely.
There's no question the regulatory risks are rising. A couple of years ago, we had to think seriously about what the consequences of nationalisation would be for bondholders. I don't think that's live right now. I don't think that's particularly on the table right now. But you point to sewage, and that's one where there clearly is a risk. There's an Ofwat investigation and an Environment Agency investigation into the sector right now, suggestions that may have been underreported or misreported. We've seen enormous penalties handed out to Southern Water, specifically, and to a much smaller extent, Thames Water, for this in the past. And we're waiting with bated breath to see what comes out of this.
Why are they so bad? Why are they so bad at this? How is it possible that the coastlines of Devon and Cornwall are being polluted by human sewage from these companies? Is it a case of investment? What have they missed?
Again, I think some context is important here. There's the Environment Agency says 98% of beaches, 99% now, is up from 97 a couple of years ago, meet the standards. We're talking about 1% of beaches now that don't meet the acceptable standards. I'm sure that should be zero. It'd be lovely if it were. There are major investments going on. In a couple of years' time, we'll have the super sewer come online in London. That's $4+ billion that's being spent to hopefully remove all combined sewer overflows from Thames's region. And we have a lot of investment going on to reduce that. It's a major focus for companies, particularly along the south coast.
So what does it mean for your credit ratings?
Operational performance has become a big differentiator of the best and worst companies recently. Companies like Severn Trent keep winning awards, rewards from their customers for strong operational performance. Companies like Southern and Thames persistently negative, and that is one of the reasons that ratings are starting to differentiate. We have Southern at the bottom of investment grade, largely, in very large part because of the fines they've had to pay, and we have companies still sitting up in single A, where strong operating performance means strong financial performance.
How should shareholders be thinking about all these risks then, if they have exposure to these companies at a time when it looks like getting dividends back in play is a far off prospect?
Well, that's an essential point. The dividends have not been large out of the sector now for over a decade, and indeed, equity has been going in large amounts to Southern Water, to Thames Water, at Anglian Water. Investors are backing the idea that they can turn around the performance of some underperforming companies and achieve rewards that way. As you say, dividends are likely to be low for at least a few years.
But in the past, did they give too much back to shareholders instead of focus on reinvestment?
So again, I think this is an area where perception isn't quite right. So in the 18 years after privatization, say, there were large dividends as companies leveraged up from almost no debt to the 70–80% leverage where they are right now. But that should be thought of as a sort of a capital structure change. Bondholders coming in where equity holders come out. It was never paid out of large customer dividends. These companies have always been cash flow negative. They all invest more than they bring in cash flow from customers. That's always been the case. And companies, and I think this is a critical point, desperately want to invest more. If we said that we want to gold plate our systems so that
plug leaks, for example, that'd be a good investment.
But possibly. So we could say, let's invest enough that even in a 1 in a 50-year drought, everyone can still fill their paddling pools. I'm not sure environmentally that's a good idea. I'm not sure economically that's a good idea. But if you said to the companies, that is your mandate, go forth and do that, companies would have their spades out the next day. Companies love to invest. The role of regulators has constantly been to claw back investment, to say, do you think that's really necessary? Are you possibly inefficient in that spending? Is there a better and cheaper way of doing it? And one of the reasons that UK water bills are comparatively low is that Ofwat has been so robust in those challenges over the years.
Okay, interesting perspectives there. Graham Taylor, Senior Vice President for Infrastructure and Utilities at Moody's, on the challenges facing this water sector. No dividends, at least for the next few years, it seems. Thank you for those insights. Coming up, turning to nuclear as the energy crisis is set to deepen. Germany is considering alternatives to cover the gap left by Russian gas cuts. We'll get the details next. This is Bloomberg.
an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together. Now I would have a much more experience about those who says I love you and then betrayed you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci is really teetering on the brink at this stage.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a gray zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open. We are 45 minutes into the European trading day. We went from a holding pattern to a slightly more pronounced sell-off that we're seeing across these markets now. Down 0.8% across the benchmark here in Europe. Future stateside, though, look at this. The S&P E-minis down 0.9%. NASDAQ futures down more than 1%. We continue to look at what's happening euro-dollar as well, essentially at parity as things stand. Down 0.3%, dollar strength part of the mix. But also this line and the energy crisis, of course, in Germany being more pronounced by the day. The German, in terms of energy, benchmark year-end power rising 11%. We've seen, of course, gas prices shoot up again today. So benchmark German energy rising 11% to a record 620 euros per megawatt hour, Francie.
Yeah, I mean, of course, this is Europe's biggest gas consumer. And we heard also from the economy minister, look, be prepared for, in retaliation, for example, Russia to cut even further some of the supplies from Russia. But, you know, the nation and other, of course, major countries are trying to prepare for this. So they're looking at nuclear, and I think coal is at a record high.
Remarkable shifts. And we've got some fantastic reporting again on the Bloomberg around how some of these companies in Germany may have to be forced to even leave that economy if things get worse from here because of the challenges around energy. Now, with Europe in the middle of its worst energy crisis in decades, politicians are being forced, as we mentioned, to look at those alternatives. Germany's leaders say the country may need to extend the life of nuclear plants if it cannot replace all its gas imports from Russia. For more, we are joined by Birgit Jennen, our Berlin bureau chief. Birgit, where do things stand in terms of what policymakers in Berlin are looking at a point where you've got 78% capacity filled in terms of gas storage? What are the alternatives and how actively are policymakers looking at them?
Well, I mean, the government is heavily looking at alternatives. Scholz is currently in Canada, and it is exactly in this context that he is basically trying to get help from Canada in providing LNG in the almost near to medium term future. But really talks with international partners have been extremely difficult. We have been talking with some people in the government, and they say that talks with Qatar has run into a deadlock. The same thing is with Norway. Norway has been extending its gas production and gas deliveries, but it's also at a maximum. And Canada is also at the moment not willing really or politically able to kind of deliver LNG because it would mean a turnaround in their environmental policy. So it is a bit of a scramble at the moment for the government, and therefore the government is seriously looking at keeping maybe the nuclear plants running for a while.
Birgit, talk to us. I mean, we focus so much, of course, on the UK cost of living crisis. What's it like in Germany? Is there more support than other parts of Europe that the government has to put in place? And what also does that mean for Olaf Scholz's popularity?
we already see that his popularity is really going down. I mean, he is being traveling during the summer break through the countryside, particularly in Eastern Germany. And last week, we actually had seen sort of the first really outbreak, aggression against Scholz at events. So the mood is clearly changing, and he's very well aware. He has been the government, but has no chance then to pass on some of the extra cost to the consumers. But it's just not enough. I mean, his basically client, his electorate is particularly hard hit because it reaches the low-income earners. So he is, and the government is looking at some form of compensation, but we have to see where the mood is turning during the winter.
Okay, so looking potentially at compensation, the political hit there, of course, for the German Chancellor. When it comes to the question of nuclear, Birgit, what is the process in terms of getting this online? There's a deadline, isn't there, for this industry, and how much pressure is coming from industry leaders on this front?
There is certainly pressure in terms of securing Germany's energy supply, because the industry is really concerned that they have to get into regulated rationing. Obviously, that would give a major hit to the economy. So the procedure is that by the end of this month, early next month, the government has done its review, and they are looking at whether where basically nuclear could make a contribution. Because you have to keep in mind the government and the energy crisis is largely an electricity crisis. So the nuclear is basically not exactly giving making the necessary energy supply needed, because what Germany is needing at the moment is gas. And so basically the government says now, while it probably only contributes a minimal bit to the energy situation, that might be the stroke which is needed to get over the winter.
All right, thank you so much for joining us. Birgit Jennen there, our Berlin bureau chief. In the meantime, euro, if you look at euro-dollar parity, it does seem pretty close. Let's bring in euro-dollar for you so that we have a look at what exactly we can be looking at. 1.0002. I feel like it could really happen any second. The pair, of course, printed some 0.9952 low in July, and that was the lowest print since December 2002. This is also a matter of a strong dollar, and then we look at Jackson Hole on Friday with that Jay Powell speech.
Yeah, absolutely. Ties in, of course, to what's happening on the monetary front, of course, monetary policy front, but also that energy story that we're talking about again. Just for the context, some fantastic context coming through from our production team in the gallery in terms of where things stand. So gas prices, European gas prices, again, at a record high. You've seen about a 12% jump. Coal prices at a record high. In terms of that overall power picture for German industry, in terms of the 5-year, this was, in terms of power prices, it was around 40 euros per megawatt hour before this year. Currently looking at 620 euros per megawatt hour. 620 from 40 about this time last year. Again, that pressure, and of course that's been fed into what's happening with the single currency currently, just a hair away from parity, down 0.3%, Francine.
Yeah, earlier this morning, it hit the lowest versus Swiss franc since January 2015. Coming up, summer of strikes hits shipping. We're live from UK Port Felixstowe. Next, as workers protest. This is Bloomberg.
airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Welcome back to the Open. 54 minutes into the trading day. Losses of 0.9% across European stocks. Let's get out to Felixstowe. Lizzie Burden is putting that port on the map for us. Potential strikes in the offing. What is the hit to trade and the supply chain, Lizzie?
Well, Tom, to give you a sense of the trade that passes through this port, 4 million of those containers pass through it every year. So that's the equivalent of Rotterdam, Europe's main trading hub. And the Russell Group estimates that you'll get $800 million worth of trade affected by this strike. We're on day 2. It's set to last 8 days. You've got almost 2,000 workers striking in this dispute over pay because, of course, we're in a cost of living crisis, double-digit inflation here. In terms of the disruption to supply chains, Maersk has already had to reroute 3 ships. It's looking at another 11 vessels as well. That's going to add delays and costs. The question is how much that gets passed on to consumers. It's mainly affecting furniture, electronics, clothing, and this is at a time when retailers are gearing up for Christmas, dare I mention that, in August, but it's true. And so speaking to port bosses, they say that they're able to weather this storm. They've been through the disruption of COVID and Brexit, but the reality is it depends on how many workers cross the picket line and are able to keep the port running, really.
Yeah, 125 days, I am assured, until Christmas. What's the likely economic impact, Lizzie?
Well, it's difficult to put a number on it, but this is only going to add to inflation when you're adding to the delays. And there's another side to this, which is the risk of a wage price spiral. It's not just the dockers in Felixstowe striking, it's also the dockers in Liverpool, the postal workers, transport workers, and the risk is that the unions add to the inflation that they're trying to shield their members from.
Lizzie, thanks so much. Lizzie Burden there in Felixstowe. Have you ever played the container game where you kind of sit on the dock and then guess with your children?
Oh, yes, it's one of your favourites, isn't it?
About what could be inside the container.
I need to do that in the next one at Long Beach.
It'd be like, you know, what's the price on a container? That's it for the European Market Open. Surveillance, Early Edition, is up next. This is Bloomberg.
hardest thing in life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It was taken as almost axiomatic 6 months or a year ago that at some point the Chinese economy would surpass the American economy in terms of total GDP at market exchange rates. That's now much less clear.
The last 10 years certainly have been bad, very bad for the bank, but you look at the situation today, trades at less than a third of book value.
No.
It still has a robust private wealth business. All they have to do is prevent the investment bank from losing money and get it back to some sort of growth.
With high interest rates and high inflation, we are still going strong. Also with the prices of energy skyrocketing, especially in Europe, we have not seen any slowdown yet.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Sentiment restrained, stocks in the red as investors look ahead to Jackson Hole. China cuts its benchmark lending rate to support the economy. The Credit Suisse shuffle, while the embattled Swiss lender brings in a new finance chief, pushing ahead with its major revamp. Plus, summer of discontent. Strikes at the UK's biggest container port are set to upend supply chains. We're live on the ground in Felixstowe. Now, first thing is first, so let's check on the markets. This is the picture overall. A lot of focus, of course, on that all-important Jackson Hole speech by Jay Powell. That will be on Friday. Stocks in Europe retreating. U.S. futures also down. Again, because of the Fed's commitment to tighter monetary settings, that's restraining investor sentiment. European stocks down 1%. Look at that. Euro dollar 0.9998. Now, the last time we had, I think, 9995 was in July, and we hadn't seen that for over a decade. This is a story of dollar strength, yes, but also of euro weakness because of all of the price swings when it comes to energy, certainly everywhere in Europe, but also especially in Germany. The S&P 500 futures down 1%, then Bitcoin 21,052. Now, if we look at the European map, and again, the euro dollar is extremely significant, especially for further ECB monetary policy. So let's look at the map. I think we have it. So there you go. You can see a sea of red with a lot of course, the things we're looking at, including some of the sectors. So look out for the difference between what we're seeing in the DAX, for example, in Germany, and what we're seeing here in the UK. Now, let's discuss Jackson Hole. Central bank watchers will be following the Kansas City Fed's economic symposium this week for clues on the U.S. rate path. Currently, there's a standoff resulting from conflicting U.S. economic data. On the one hand, we had a strong jobs report. On the other, a cooler than expected inflation print. Well, joining us now to discuss all of this is Susanna Streeter, Senior Investment and Markets Analyst at Hargreaves Lansdown. We also have Phil Serafino, Bloomberg Senior Editor for EMEA Equity. So thank you both for joining us. Susanna, thank you so much, and welcome to the studio.
Thank you very much. It's great to be here.
So what kind of equities are you buying, if anything, ahead of Jackson Hole?
I think it's a very difficult time right now. So much uncertainty. I think that's reflected what we're seeing right now in the equity markets. A bit of treading water going on, trying to work out what the direction of travel will be. You mentioned, of course, all that conflicting data. And I think there really was a sense that because that inflation print came in a little bit lower than expected, there would be this easing off of this monetary tightening. Unfortunately, I think that certainly has been over-optimistic, and that's been reinforced by comments we've had from some Fed policymakers. So certainly, for now,
really important that Jackson Hole, Jay Powell.
Oh
right,
yeah,
on Friday.
absolutely. Yeah, really important, because I think there's a real need for some more clarity, really, on what we should expect in the time ahead, at the time when, of course, the cost of living crisis is biting for so many people, not just here in the UK, it was particularly bad, but also in the States as well. And you've got those retail latest results showing that actually even middle classes are trading down.
So, Phil, what are you expecting from Jackson Hole?
Well, I think Susanna's right. The market has been treading water. And, you know, it's unclear what kind of signals the Fed is going to give, Jerome Powell is going to give at that meeting. But investors want some sort of signal. You know, the market is priced in sort of the perfect scenario where the Fed doesn't go too far raising interest rates. I mean, investors are going to be hanging on every word. What is the tone? And so that is the first big event for the market. You know, the people are trying to figure out if the rally is for real, and the Fed will be a big sign. And then right after that, you have some economic data in early September. There's a jobs report the first Friday of September, and then there's CPI in the middle of the month, leading up to the Fed, I think on the 21st of September. So, you know, there's a lot riding now for the market on these next couple of weeks, starting with Jackson Hole.
Yeah, I mean, a lot will be writing. What's your take, Phil? And then we'll get back to Susanna on the overall equities picture. But what's your take on earnings? I know they're a little bit backward looking, but can we be really in for crunch time the next quarter?
I mean, the earnings in the second quarter, the market was generally very pleased. You know, companies look like they're managing the inflationary pressures pretty well. Demand does not show signs of hugely tailing off. Again, it is a snapshot. The expectations are that estimates are going to have to come down given the fact that interest rates have gone up so much. That's going to feed through to the economy. It's going to curb consumption, certainly by consumers. So the question is, you know, do earnings hold up well enough over the next couple of quarters to keep the market up at these levels and even send it higher?
Do you worry, Susanna, about second round effects, of course, for energy that we haven't really even looked at yet?
Yeah, absolutely. And of course, there is a lot of talk about the potential impact of the Iran nuclear deal and how that's already been priced in to some extent, partly contributing to the drop in crude prices that we've seen. But obviously, they've been mainly pushed down about fears about the global downturn. But of course, I'm not expecting any kind of deal to take place before the November midterms. So I think, though, that's going to be pushed into next year. Certainly from the European side, there's a lot being pushed there, given the energy crisis unfolding right across Europe. They really need to try and find some way of ensuring that crude prices aren't as onerous such as gas prices are. So I think that is going to play out in the next few months as well. So there could be certainly some weakness going forward.
And so what does it mean? So when you look at your portfolio, what do you buy with conviction? If anything.
I think it's very difficult. I mean, this is a time when really you need to make sure that you have a very diversified portfolio and no single major big plays, I think, because it's such an uncertain outlook. And I think looking across other asset classes as well to try and give your portfolio a bit of extra ballast, really. So I think certainly when it comes to consumer focused stocks. I think, as Phil was indicating as well, we may have seen some pretty good earnings, but actually I think there's going to be much more weakness to come. And although there was optimism actually surrounding those Walmart results, in fact, there was quite a lot of weakness in those figures because there's so much discounting having to be undertaken at the big retailers, and we are getting this trading down. Consumers simply can't afford those discretionary items. Research, particularly for the UK, Hargreaves Lansdown has undertaken financial resilience research with Oxford Economics, shows that next year only 1 in 10 people will actually have the money left over at the end of the month to make those discretionary purchases. And I don't think that's been fully reflected.
That's really interesting. What do you not see fully reflected, Phil, that we could see as we get into the winter months? I don't know whether it's credit card bills or whether it's that pricing power that so far a lot of retailers have been able to pass on.
Yeah, I think just the general inflationary environment is really going to weigh on consumers. Susanna was talking about gas prices. Europe is facing up to a fairly tough winter on the energy supply front, and there's no sign that prices are going to come down too much soon. And it's pretty interesting that consumer discretionary stocks have done very well since the market low in June. So investors are sort of assuming that none of those pressures are going to start to bite on consumers. And it's going to be interesting to see whether the market sort of can thread that needle. A lot of things have to break right for consumers to do well over the next 6 months.
Phil and Susanna, thank you so much. Susanna Streeter, they're a senior investment and markets analyst at Hargreaves Lansdown, stays with us, and thanks to our Phil Serafino in Paris. Now, coming up, the summer of discontent continues as workers go on strike at the UK's busiest port. We'll be live on the ground, and this is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is what we're looking at in terms of euro-dollar. It did touch parity, below parity actually, something that we've been watching very closely for quite some time. Let's also look at Chinese main interest rates tool. It's a little bit geeky, and that's what we like, especially on a Monday morning at 9:12 UK time. Now, Chinese banks have lowered their benchmark lending rates. The authorities have stepped up support for the property market with additional loans. It's all part of a government government-guided attempt at alleviating a worsening housing crisis and bolstering borrowing demand. Now, it did little to actually lift a risk-off sentiment on markets. Investors now counting down the Jackson Hole gathering of central bankers later this week, where they will be on the lookout for any hints about the Fed's tightening plans. Well, we're back with Susanna Streeter, Senior Investments and Markets Analyst at Hargreaves Lansdown. We have so much to talk about, Susanna. We're all over the place. We're looking at like really geeky Chinese stuff to give us an indication of what policymakers can do, but we also need to talk about euro-dollar parity and the fact that it broke through that. First of all, on China, can they support the world economy?
Well, it's interesting because it's unleashed this round of stimulus in lowering this key lending rate. And in previous attempts, when there has been this kind of level of stimulus, it has, I think, lifted the markets much more, an expectation that China will kind of resume its powerhouse status. But that's certainly happened. And I think that's an indication that the market does expect this underlying weakness in China to continue, partly because of the really struggling property sector with Evergrande and other major corporations still really teetering despite all the efforts to try and kind of buy off chunks, for example. And also, interestingly, I saw like Burberry share price hadn't really moved much. Of course, Burberry highly reliant on consumer sentiment in China as well. So I think certainly for now, that uncertainty on China will continue.
But I mean, investors just want more, right, from policymakers in terms of support to the economy. Last week or 10 days ago, we had that token support. Are you expecting them to do much more?
I think they will do much more, yes, certainly going forward. And we've seen that in the past. I certainly do think that we'll continue to see that in a kind of incremental approach going forward.
All right, I have a million questions. We did have a really great China data start. I think it's like 2 standard deviation in terms of what we've seen in terms of ratio. Let me get on to the UK. I mean, I don't know what to do with the UK right now. We've seen some, great stories, including from our Valerie Teitel saying a lot of the currencies are actually behaving like emerging markets currencies.
Well, I think the summer of sweltering summer of strikes is turning into a very awful autumn and looks set to be a bit of a winter of woe, certainly for the UK, because we ain't seen nothing yet in terms of the rises in energy bills, up to £3,500 in the autumn. Forecast it could rise to £6,000. Now, that is so high. So many households are going to really struggle, and that is going to have a real impact, I think, on earnings, the consumer sector in particular, going forward. I think it's going to be so tough. And, of course, we still have this uncertainty surrounding energy security, not just in the UK, but across Europe as well, which is partly why, you mentioned the euro-dollar parity. I think that's why you're seeing continued weakness in the Eurozone because of fears about whether Germany can cope if gas supplies are turned down even further.
But Susanna, when you look at the UK, and we're talking about energy poverty, right? And what you're pointing to is households not being able to repay bills. I mean, it's a scenario that has been highlighted by the Bank of England. Is it going to be worse than what they think? And again, what does it mean for an investor?
I think the danger is we've got this groundswell, this campaign to ditch the direct debits. Yes. So more than 1 million people vowing not to pay their direct debits because they can't afford their energy bills. Now, that could have a knock-on effect in terms of credit risk. That could compound the issue because they have to pay more for any kind of borrowing going forward. So this individual crisis could end up causing much further pain, deeper pain going forward.
So as an investor, do you not touch the UK, or do you wait and see what the winter
certainly, FTSE 100 has proved remarkably resilient because of its makeup, energy financials, for example. There will be, I think, certain companies that are going to fare worse than others, but there is still, underlying strengths in some. You've got the health tech sector, for example, and the health sector in terms of, say, PHP Properties, leasing doctors and surgeries, and there is going to be some stocks that are going to be resilient. And I think perhaps searching for income-generating stocks might be the way ahead to find that stability in the UK market.
Susanna, thank you so much for joining us today. Susanna Streeter, they're a Senior Investment Markets Analyst at Hargreaves Lansdown. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. About 2,000 dockers at the port of Felixstowe in eastern England have started an 8-day strike, halting the flow of goods through the UK UK's largest container gateway. Workers are unhappy at the port owner's offer of an average pay rise of some 7%. Felixstowe handles about a third of Britain's total container volume. Now, a senior diplomat is reported to say that Russia does not see a diplomatic solution to the war in Ukraine and expects a long battle. Meanwhile, Moscow is investigating a car bomb that killed the daughter of a Russian nationalist who had herself been sanctioned by both the US and the UK. The bombing comes ahead of this week's 6-month anniversary of Putin's invasion of Ukraine. In China, the province of Sichuan is extending industrial power cuts as a heatwave persists. Officials say blistering temperatures and surging demand for air conditioning have caused gaps in generation. Companies, including Toyota, have already suspended operations in the region for several days. The power shortage adds another challenge to companies already contending with the country's COVID-0 strategy. And Singapore is repealing a colonial-era law that criminalizes sex between men. The country's Prime Minister says removing the legal ban is the right thing to do and something that most Singaporeans will now accept. Lee stopped short of recognizing same-sex unions, adding that the Constitution will be amended to protect the definition of marriage as being between a man and a woman. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thanks so much, Leanne. Coming up, turning to nuclear as the energy crisis is set to deepen. Germany is considering alternatives to cover the gap left by Russian gas cuts. More on that next. And this is Bloomberg.
This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Have to be able to give our customers vehicles, that are their primary vehicles that are EVs, and to be able to do that, we need to have range and infrastructure, and we need to remove the pain points, and so that's what we're doing.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's focus on Germany now. And the country may not be able to replace all of its imports of Russian natural gas this winter and might actually have to resort to nuclear power to plug part of the gap. Europe is in the middle of its worst energy crisis for decades, of course, which has fueled inflation and put nations at the brink of a recession. Now that's forcing politicians to look at all alternative available. Now with Europe in the middle of this crisis, let's go straight to Birgit Jennen, who's our bureau chief over in Berlin. Birgit, great to have you on the program yet again. First of all, what kind of alternatives has Germany found?
Well, the problem is that Germany has not yet found really an alternative. They are in talks with Canada. They have been in talks with Qatar and in talks with Norway. And all of these government and countries say that at the moment they're not ready really to supply extra energy. Norway can't, is at the maximum of its gas production. Canada has problems domestically because it would mean a turnaround in their ecological policy, and Qatar is really playing hardball, we hear, sort of with people who are negotiating with them. So really it is a problem, and therefore the government is really looking at any way how to basically produce some more energy for the winter, and for that reason they are looking at something that they have never considered in the past, keeping sort of three nuclear plants running at least for a while, and they are doing at the moment research which the result is expected at the end of the month.
So Birgit, what does it mean for the cost of living? How tough is it for German households right now?
We do obviously see that already the prices are rising, but I think the consumers haven't yet actually experienced the real brunt of it. This is going to come over the next month when basically the surcharge which is being introduced is going to hit. It goes up to 500 euros per household, which is a lot for particular low-income earners as well. So on top, there are already the existing energy price rises. So it really hits particularly Scholz's electorate, and that is likely to become an issue, a political issue for him also over the coming month.
Yeah, and his popularity, Birgit, is really waning. Are you surprised at how fast it's waning?
I do think it was expected. We do see massive changes going through in Germany. I mean, and even before the election, he actually had also very often very low popularity rates. So really that there was the risk that whenever there is a crisis in Germany, that maybe the population, the electorate is going to look at alternatives and is looking at the CDU, especially at the moment. That was to be expected. But what it means for Scholz is really that he now has to make sure that his own party is staying together, because if not, then he really needs to turn inwards and cannot play the foreign policy role he has been playing so far.
Certainly. Birgit, thank you so much. Birgit Jennen there from Berlin. This is Bloomberg.
is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
Now I would have a much more experience about those who says I love you and then betrayed you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing vision.
Sentiment restrained, stocks in the red as investors look ahead to Jackson Hole. China cut its benchmark lending rate to support the economy. Well, the Credit Suisse shuffle, the embattled Swiss lender brings in a new finance chief pushing ahead with its major revamp. Plus, summer of discontent, strikes at the UK's biggest container port are set to upend supply chains. We're live on the ground in Felixstowe. Well, good morning and welcome to Bloomberg Surveillance Early Edition, everyone. I'm Francine Lacroix here in London. Now, Britain's summer has already been punctuated by scenes of travel chaos, and there's more to come. Workers at the country's largest container shipping port, Felixstowe, have joined the list of those on strike. Now, for more, we're joined by Lizzie Burden, who's in Felixstowe for us. Lizzie, what a shot behind you. I mean, I don't know how many containers you can count, but it really captures the imagination of so many people around us. How will this disrupt trade?
Well, Francine, about 4 million containers pass through this port every year. So that gives you an idea of the scale of the trade that happens here. And this is the UK's biggest container port. Now, 2,000 workers are striking for 8 days. It's day 2 over this dispute on pay because we've got double-digit inflation in the UK and the port isn't offering that in terms of the pay rise to its workers. In terms of the disruption, the Russell Group says about $800 million worth of trade will be affected. It's lots of clothing, furniture, electronics, just as retailers are gearing up for Christmas. Flexport says it's going to take 24 days to clear the backlog of cargo. But the port says they've been through COVID, they've been through Brexit, they're going to be able to mitigate this disruption, but really they're not going to know how bad it'll be until they see how many workers cross the picket line.
So how long are we expecting the strikes to last, Lizzie, and what's the likely economic impact of that?
Well, speaking to workers in the area, it's incredibly difficult to decide not to go to work when it is a cost of living crisis. They're giving up their full wages. And so the port will be hoping that many of them crumble, cross the picket line and the strike breaks down. It's difficult to tell what's going on in the negotiations behind the scenes. But of course, it isn't just Felixstowe dockers who are striking. It's also the Liverpool dockers. It's also transport workers, postal workers, barristers. And so the risk is that the unions add to the wage price spiral that they're trying to shield their workers from in terms of the inflationary impact. But speaking to port officials here, they're very frustrated because they feel like they've been targeted by the unions to send a message when it comes to employers around the country in terms of giving bigger pay rises because of the crisis.
Lizzie, thank you so much. Lizzie Burden there in picturesque Felixstowe, and you can hear the seagulls in the background. Now we're joined by Richard Ballantyne. He's Chief Executive of the British Ports Association. Richard, thank you so much for joining us. When are you expecting this to last and still? How many more strikes for how many days?
Well, hello, and thanks for inviting me on, and sorry that it's in these circumstances that I'm asked to comment. I think, in short, we don't know. I mean, obviously, this particular strike is scheduled for 7 days, but there is a possibility that there could be further strike action, although that is a matter for the union, of course. There will be in discussion with the employers at Felixstowe.
Richard, what does this mean for the overall economic activity in the UK? How much disruption are you expecting from the strikes called so far?
Yes, it is a kind of issue for the logistics industry and the freight industry and the shipping sector here in the UK. As Lizzie mentioned, Felixstowe is the UK's largest container port, but we do have other ports, so they'll help to pick up some of that slack. Freight will be rerouted through places like Southampton and London and elsewhere, etc. The ships, that is more difficult, so I would imagine that those vessels might be less fully loaded, but they will be waiting to come into Harwich and Felixstowe as they normally do, and then turning around, continuing their journeys. The issue is, if you do reroute freight away from its traditional travel plans, etc., there will be a cost, and those costs will be passed on to importers, traders, and potentially ultimately consumers.
How much, Richard, of that cost? Do you have any kind of ballpark idea of how much more expensive this means for the workings of British ports, and how much of that is not only put to some of the consumers but also some of the companies using your services?
No, unfortunately, that would be a question better suited to the wider logistics industry. I saw the Russell Group study previously, which seemed quite extreme, I have to say. But they obviously have worked out their numbers using their own formulas, etc. So I think it's a question better suited for them and people in the logistics industry.
Richard, give me a sense of how bad it is right at the moment for some of the port workers. Like, what are you looking at for the next 6 months? So how much are you expecting energy bills to go up? Like, what kind of metrics or numbers are you looking at?
Well, we're just like the rest of the population here in the UK. We're watching what politicians say, we're watching what energy companies say, and we are looking at those increased bills just as everyone is. And of course, port companies will be facing increased costs as well, not just the employees, but do sympathise with those employees. I think it'd be wrong for me to get drawn into the discussion between Felixstowe and its own workers. That's a matter for them to alleviate, to sort out. I don't represent either party, so I think it's better for me not to be drawn into that debate specifically.
Right, but of course, I mean, the worry is that this upends some of the supply chains. I don't know whether you've also had discussions about what it means for insurance, for example, things like that. Like, what do you see us looking at in terms of British ports mid-September?
Well, everybody will be affected by the cost of living crisis, and you mentioned insurance and the financial services sector. I think it's safe to say a lot of the industries here in the UK will be looking at the impacts of inflation and the cost of living crisis, etc. So I would say it's more of the same to come. I'm not sure about strike action. Some ports have already negotiated deals earlier this year. Others will be working towards the end of the year. So we have to just wait and see how far the impact is across the ports industry. But we do have a very diverse and varied ports industry here in the UK with a number of different ports and operators. So it is a big sector for us here.
Richard, thanks so much. Richard Ballantyne there, Chief Executive of the British Ports Association. Now, we're also joined by Josie Dent, Managing Economist at the Centre for Economics and Business Research. Thank you, Josie, for joining us. We're looking at some of the supply chain disruptions. Of course, we're in Felixstowe, one of the biggest. I mean, I think Lizzie was saying some 4 million containers are shipped in and out every year. How much of an impact will this have on the UK economy?
So we can look at this from a few different angles. Of course, we have the immediate supply chain issues of supermarkets, retailers, all sorts of businesses not being able to get the produce they need right now, which will have knock-on effects on their supply chains if they don't have the inputs they need for their production. And then we have the element of the negotiated pay rise. All that workers are asking for is an inflationary matching increase in wages. But the concern across the UK with these strikes, with industrial action, is that we'll end up with some kind of wage price spiral where wages increase to match inflation, and then that causes inflation to increase itself through higher demand. And then if we see knock-on impacts in terms of higher prices, because as we discussed earlier, ships have to be rerouted and that costs more money, then we are seeing a direct inflationary impact. And so this,
Josie, give me a sense of the estimate. So with every, we're looking at rail strikes, we're looking at supply chain, of course, disruption because of port strikes. With every day of strike, how do you model how much of a hit the economy has?
So, I mean, if we turn to rail strikes, we have modelled a cost estimate for that. And for the rail strikes last week, the 3 days that we saw, we estimated that will cost the UK economy £65.3 million. And that's about a 0.01 percentage point decrease of the Q3 growth figure that we're forecasting. So it is substantial enough to affect overall growth, but not in a major way. Similarly, these port strikes will have an effect that will be in the multi-millions. We haven't yet estimated it. It's quite difficult to do, especially with a lot of uncertainty currently about how long this strike will last. But it will be substantial, especially if it leads to further price increases, which leads to further inflation, which has knock-on impacts on the cost of living crisis, which is the main factor having downwards pressure on the UK economy and UK growth right now.
So, Josie, at some point, there's what of course economists call a wage price spiral, where it's completely out of control because everyone's asking for a wage increase to match up with the cost of living. Are we there yet?
I wouldn't say we're there yet, no. I mean, the latest labour market data shows that there's around a 3% real wage contraction for the average worker. So wages are not growing as quickly as inflation. And that is, of course, why we have a cost of living crisis. The UK in general is not that unionised. Most people can't strike. And so most people are actually just experiencing slower wage growth than inflation. And it's a few different industries that have striked. But for the most part, people aren't seeing wages increase as fast as inflation. It's when this becomes a longer term issue with inflation, if it stays high for a very long time, then we could see that kind of spiral.
Josie, how problematic is weaker pound?
So that itself can be a source of inflation and is a big concern for the Bank of England at the moment. With a weak pound, imported products become more expensive, and we do import a lot in the UK. And so if the pound becomes weaker and weaker, then that will drive up the prices of many different goods that we import from other countries. And so that's a reason for the Bank of England to continue increasing interest rates, not just to affect demand in this country, which then influences inflation, but to influence global forex exchange, and so that we don't see the pound depreciate too much versus countries that we're importing from.
Josie, thank you so much. Josie, they're managing economist at the Center for Economics and Business Research. Now, coming up, we focus on Credit Suisse as the bank names a new CFO, and staff are also anticipating deep cuts from the latest emergency restructuring. While we focus in on the troubled Swiss lender, that's coming up next, and this is Bloomberg.
hardest thing in life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Credit Suisse has continued its shakeup at the top management, introducing Deutsche Bank's Dixit Joshi as its new CFO while promoting a new chief operating officer. Well, today's Big Take takes a deep dive into the Swiss lender's emergency restructuring, which also likely delivered deep cuts as well, potentially signaling the end of the lender's ambitions to be a Wall Street titan. Now, well, David Harrow of Harris Associates told us last week it might not be all doom and gloom for Credit Suisse.
This has been a problem child. We've owned this bank literally since the early 2001. And the first 10 years was a very good holding. I mean, it literally went from 20 to 60 or 70. Now, what we should have done is just sold it and that's it. But of course, during the financial crisis, they actually performed better than most other banks. And we increased our position again and had a very, very poor decade holding Credit Suisse as they've kind of hobbled from one crisis to the next. So what's the situation today? The last 10 years certainly have been bad, very bad for the bank. But you look at the situation today, trades at less than a third of book value. It still has a robust private wealth business. I mean, they have 4 businesses, one of which is absorbing the profits of all the other 3. And all they have to do, really, it sounds simple, but all they have to do is prevent the investment bank from losing money and get it back to some sort of growth.
What would you do with it? Would you spin it off?
If they cannot fix it, if they cannot find a way for the investment bank to earn through cycle returns, they have to do something with it, whether it's spin it, sell it, merge it. But at this stage, the price of Credit Suisse stock assumes roughly a 10 to 15 billion negative on the investment bank. And if they could repair the investment bank, make it such that it can earn through cycle profits, clearly it's worth more than negative 15 billion.
David, how much time should they try and fix it before they sell it, or spin it off, or do something with it?
Well, certainly in the next year or two, this has to be decided, but you can't keep doing the same thing as they've been doing over the last decade and get 0 results. They have to put an end to it. At some point, they either have to fix it or to look for other options.
Well, that was David Harrow of Harris Associates that has around 10% of Credit Suisse, the largest shareholder by far. Now, joining us now is Bloomberg's Miriam Belezu in Zurich. Miriam, how big of a shakeup of the investment bank are we actually expecting?
Well, Francine, I think it will be a significant change that's coming for the IB here. It will be significantly diminished. They are currently looking at all options. Everything's on the table. But we're hearing that in extreme scenarios, it could get to 2/3 of the banks getting torched. So quite a change.
That's a lot. So how quickly can we expect that, Miriam?
Well, it's still undecided. The timing's not extra clear. However, the bank has indicated that they'll give some sort of clarity on how it's likely to look like by the end of Q3. So by the end of October, we should have a bit more clarity over how the shakeups likely to look like.
So, Miriam, through all of your great reporting, what do you find most surprising, actually, with Credit Suisse? So that it can attract still top talent, or that it's just going to not want to become a Wall Street titan when it comes to the investment bank?
I think it's still, IB is still at the core of the company, and just looking at Credit Suisse's history for investment banking, just a decade ago, they were in top 5 competing against Wall Street. And I think this is something that's still kind of paramount to the bank. However, we cannot just ignore the fact that it's very hard to attract talent just broadly across Wall Street, but let alone with the situation that Credit Suisse is currently in. And obviously, talent retention's been a big topic, and particularly the compensation package they've been handed out to a lot of their senior bankers just to retain talent. And I think this is going to be the biggest challenge for the bank this year, because no matter how big the bonuses are, really the reputational damage will start to kind of trickle down to all of the people within the banks. So I think this is the main challenge for the bank, retaining their core staff and also just providing some form of stability. We've seen new management changes again today, so.
Yeah, it certainly feels like that will definitely be their biggest challenge. Miriam, thank you so much. Miriam Balazu there in Zurich. Now, you can read more online around the terminal by typing NI Big Take. Now, coming up, we'll bring you full coverage of all the news from Jackson Hole, that big speech, of course, on Friday by Jay Powell. We also get euro-dollar touching parity, below parity. What happens next for euro-dollar? This is Bloomberg.
This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. Chinese banks have lowered their benchmark lending rate while authorities stepped up support for the property market with additional loans. The 5-year loan prime rate to reference for mortgages was reduced by 15 basis points to 4.3% after being cut by the same amount in May. This as Beijing battles a worsening housing crisis. It's reported members of the UK's Criminal Bar Association have voted overwhelmingly to begin permanent strike action from next month. Court cases have already been disrupted in the pay dispute by criminal lawyers. A permanent strike could see legal cases postponed or even collapsing. United Health, Amazon, CVS Health and Option Care Health are said to be among the bidders for US company Signify Health. Sources tell Bloomberg that United Health has submitted the biggest bid in excess of $30 a share, while Amazon's offer is just close behind that. Signify is holding a board meeting today to discuss those offers. And the debut of the prequel to Game of Thrones has overwhelmed the HBO Max streaming service in the US. More than 3,000 outages were reported across the platform at 9 p.m. New York time. Just as The House of Dragon was released, the new series premiered more than 3 years after the last episode of Game of Thrones, which drew more than 19 million viewers. And that's your Bloomberg Business Flash. Francine.
I will 100% watch that. Just because it's crashed, Leanne. When it crashes, it means it's good. It's like going into a busy restaurant. You never go into an empty restaurant, even if it means queuing for like 2 hours.
Well, Francine, when Stranger Things debuted on Netflix, that also crashed. I've never watched Game of Thrones, but I think I should now because it crashed. Like you said, it just draws attention to the whole series, doesn't it?
It certainly doesn't. There was also our Sarah Rappaport wrote a great review, which got everyone quite excited in the newsroom. Leanne Guerin's there with your top stories. Thank you so much. If you look at European stocks, but also U.S. futures, a little bit of a downward movement. That this is as they watch to Jackson Hole, that all-important speech by Jay Powell. That's on Friday. So stocks in Europe definitely retreating. I think we have the board up. If we do, we can bring it up. There you go. Now, we also look at euro dollar, one of the biggest or the easiest way, I guess, to look at some of the angst that we're seeing out there. The dollar spot climbing to a 5-week high. Euro, quite a lot of pressure for euro because of what we're seeing with gas price and energy prices in Germany. Now, the latest MLive poll survey also suggests that stocks and bonds are set to tumble once more, even though inflation has likely peaked. A Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kaylee Lyons in New York. Anna Edwards back in London. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface, and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The U.S. doesn't really need to be on an improving growth trajectory. All that needs to happen for the dollar to strengthen is for the rest of the world to do poorly.
I think we're going to remain strong at least for the next 6 months. If you look at how the market is evolving, it's trying to build a sense of confidence.
When we look at the economic conditions and the market conditions in front of us, it leads us to a more cautious place.
It's not really the time to be taking big absolute directional bets.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. China tries to fix a worsening housing crisis. Banks lower their benchmark lending rates while the government steps up support for the property market. Walkout. 2,000 dock workers began an 8-day strike at the UK's busiest container port. They rejected a contract offer as inadequate. And a shake-up at Credit Suisse. There will be a new CFO and operations chief. All this as the Swiss lender prepares for a major restructuring of its struggling investment bank. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines in New York. Matt Miller is off today. And Kaylee, I can report nothing but deteriorating sentiments the longer the session continues here in Europe.
Yeah, and it has started really in the Asian trading session overnight, Anna, in which basically every single equity benchmark was lower, the one exception being China, which I'll mention in just a moment. But clearly, risk-off sentiment is prevailing. The MSCI Asia Pacific Index was down for a third day in a row, losses of a little more than 0.5%. But as I said, China the exception after those banks cut the 5-year and 1-year loan prime rates and really additional support coming in for the property sector in the form of loans. So that raised Chinese property stocks in particular, which gained about 1% overnight. What's interesting, though, is that as China eases policy, basically every other central bank is tightening policy, and that includes New Zealand, where the central bank overnight said they may need to raise rates to 4.25% in order to rein in inflation. And you saw an immediate reaction in the New Zealand bond market, that 10-year yield climbing 14 basis points to right at that 370 level. And finally, in foreign exchange, the big underperformer in Asia on the day is the South Korean won, actually hitting a fresh 13-year low against the U.S. dollar, trading right just south of 1340. That in part is due to weak trade data, but also it's just that basically every single Asian currency, or really every currency across the board, is weaker against the dollar today. Kriti, really speaks to the risk-off tone in these markets.
Yeah, but that dollar strength, I think, is really what you're starting to see cross-asset, at least here stateside. Real specifically, when you're looking at the futures, we were talking about that deteriorating sentiment in Asia, in Europe, well, showing up in the United States as well in the futures action. But a lot of it, once again, that inverse correlation between the dollar and the stock market, it is still strong. So keep an eye on that. It's not just about the currencies, not just about the commodities. It is actively infecting just how much kind of courage investors have to hop into the U.S. market in a risk-off market. Remember, the U.S. tends to outperform, but not in the face of that stronger dollar. So, of course, we see futures down about 1.2%. And the U.S. 10-year really unchanged here at 297. But if you look at that intraday volatility, that's what you want to keep an eye on, because really you have seen a little bit of choppy action throughout that Asia session. The dollar, like I said, already stronger. But when we talk about risk-off, we got to talk about Bitcoin. That risk-off sentiment really magnified through that cryptocurrency, Anna.
Yeah, risk-off sentiment really magnified here by the extensive red that we have on the European map this morning then, Chrissy. So as I mentioned to Kaylee, sentiment just deteriorating as the longer we go through the European session. We have higher gas prices, we have a weaker euro, all that adding up to much weaker picture for risk assets. The FTSE down by 0.6%, but that's nothing compared to the CAC down by 1.7%, the DAX down by 1.8%. That's the graphics, that's the way this looks geographically across Europe. Let's have a look at some of the key dynamics, the key players, the key assets on the move, if you like. And it doesn't matter if you price it in pounds per therm or euros per megawatt hour. We see higher gas prices across Europe today. These are the benchmarks in the UK and in Europe, and they're both on the rise. And those percentage moves are just the prices going higher today. We've already seen a 14-fold increase in German power prices now compared to the 5 years that were before this year, so pre-2022. And we are seeing now Germany thinking about using more coal, extending the life of its nuclear power plants, looking at all kinds of options to try and shore up supplies of energy. And the thing that has driven this big move today is Russia saying it needs another 3 days of maintenance on the Nord Stream pipeline at the end of this month. That once again triggers concerns about whether those taps will be turned back on. That's weighing on the euro. We dropped below parity. We're back above it now, 1.0013. But we did drop below parity, and we did have, I was reading a note earlier from Nomura talking about the possibility of blackouts during the winter in Europe, and that is obviously something that's going to weigh on the currency. I put in here one corporate story as well, Kaylee, because this is of interest. This is a company that's listed in London, but just under 70% of their revenues come from the US. It also operates the Regal chain of movie theaters over in the United States. They may file for Chapter 11 bankruptcy. They're dealing with a big debt pile because of the pandemic, and also because they were about to make a bid, or they made a bid for a Canadian company that they didn't end up buying, but have a fee to pay as a result, Kaylee.
Yeah, that stock was down 58% in Friday's session, which is really quite remarkable. Of course, that is what happened last week. Let's take a look forward now at what is coming this week. UK Foreign Secretary Liz Truss and former Chancellor Rishi Sunak are campaigning today in Birmingham as they vie to be the country's next prime minister. Plus, with politics here in the U.S., primary elections will be held in Florida and New York on Tuesday. Plus, retail earnings keep rolling in, with Macy's set to report results. Russia's war in Ukraine will be hitting the 6-month mark on Wednesday, if you can believe it. It has been a half a year already. Then on Thursday, Kansas City Fed's annual economic policy symposium kicks off in Jackson Hole, Wyoming. Of course, we'll have live coverage from there with the surveillance team, as well as Michael McKee. And the big event will be Friday, Kriti, when Chairman Powell takes the podium in Wyoming.
And really the conversation there is all about just how much further can the Fed really hike as we start to see looser financial conditions. A completely different story across the Pacific in China. China making another attempt to alleviate the growing housing crisis and bolster borrowing demand. Chinese banks lowered lending rates while authorities stepped up support for the property market with additional loans. Enda Curran, our Bloomberg chief Asia economics correspondent, joins us now. And it's interesting to see this divergence between the United States and China right now when it comes to the policy front. How quickly could this become a dangerous move?
Well, we had two new developments today. On the one hand, banks said they will bring down their 5-year lending rates by more than expected, by 15 basis points. Clearly, that will bring mortgage rates lower. That is going in the opposite direction to the US, like you mentioned. It will, of course, perhaps help demand for loans at the margins in China. On the other side, by the way, today, the government said they will make loans available to those property developers who need finance to finish off unfinished property development. So when you take it together, it speaks to a new urgency among the government to try and fix China's housing slump. It will add some support to that sector, but nobody's saying this is a turnaround for China's economy. More support will be needed, and it is a deepening divergence with the Federal Reserve.
And a lot of other central banks as well. Bloomberg's Enda Current, thank you so much. Of course, central banks in Europe dealing with an energy crisis as natural gas prices are surging once again on fears that planned maintenance on the Nord Stream pipeline may lead to a prolonged supply halt. Bloomberg's Danny Berger joins us now and is taking a look at the moves, which, Danny, maybe no surprise, but they're huge today.
Yeah, gigantic, and it's not the first time we've seen gigantic moves or had this fear that with the maintenance, it would be used as an excuse for Russia to completely halt that energy, that nat gas flow, or severely curtail it. Of course, it's already curtailed. So we see this big jump in nat gas futures. If you were to price Dutch front-month futures the same way you price oil, this would be the equivalent of around $500 a barrel. All of that feeds into what power prices we're paying here in Europe, and that also means record power prices in Germany, at one point jumping 20% today. Now, the German government has already talked about trying to reduce gas usage by 20% and said that if Russia stops flows, they would not have enough gas for the winter. So what does this mean? Higher prices for nat gas means industry shuts down in Germany. That means the major exporter of Europe also shuts down. That means current accounts start to deteriorate and narrow. All of that means a weaker euro. We saw the euro do just that this morning. It continues to, at one point, piercing below parity. It is just above it at this moment. Anna, you pointed it out. 10013 is where we stand on the euro. But of course, things could continue to get worse if we continue to see industry shut down and an inflation spiral that is truly out of the central bank's hands.
Right, yeah, more details there from Danny Berger. Thanks, Danny, for that. Bloomberg's Danny Berger on the energy markets and the knock-on impact on FX that is having. Now, Britain's summer has already been punctuated by scenes of travel chaos, and there's more to come. Workers at the country's largest container shipping port, Felixstowe, have joined the list of those on strike. So this is a different kind of travel for containers. For more, let's get now to Bloomberg's Lizzie Burden, who joins us from Felixstowe. This on the east coast of England then, Lizzie, a really busy port when it comes to imports from Asia. What's the latest?
Yes, Anna, this is a symbolic moment in the UK's summer of strikes because Britain's biggest container port is Felixstowe. As you can see behind me, about 4 million of those containers pass through this port every year. And so the Russell Group estimates that the 8 days of strike action are going to cost about $800 million worth of affected trade. That's electronics, clothes, furniture, all when retailers are gearing up for Christmas. Flexport says it's going to take 24 days to clear the backlog. Now, you could say, yes, shippers can reroute. Maersk has already redirected 3 ships. It's monitoring 11 more. But that's going to add to costs and time delays. Now, yes, disruption is the point of a strike. The union has rejected a pay offer that wasn't quite as high as the 10.1% CPI that we're seeing in the UK now. The port says that's too high to expect because this pay offer has to deal with the whole of 2022. Inflation's only just tipped into double digits. But the unions are making a point. It's not just the dockers at Felixstowe who are striking, it's also dockers at Liverpool, it's transport workers generally, nurses, barristers. The risk, though, is that the unions, through a wage price spiral, add to the inflation that they're trying to protect their members from.
Lizzie Burden in Felixstowe, we thank you as always for a really crucial update coming out of the UK. Let's bring it back to the States here. President Biden has spoken with European leaders looking to revive a nuclear deal with Iran. The U.S. is considering a response to Tehran's position on the latest proposal and wants to calm fears in Israel about a possible deal. That, according to Axios. Anne-Marie Hordern, our Bloomberg Washington correspondent, joins us now right here on set in New York this morning. Walk us through the details of the deal.
Well, right now, this call, we don't have a ton of details about the call. And the deal, the United States has plays their cards very close. So they're not saying what the response is going to be. All we know is that the Europeans say that it was constructive. So we still don't know how the United States is going to respond. Potentially, this call was to quell some of those concerns with Middle East allies like Israel, who are starting to panic a little bit that maybe a deal will be close. But I don't think we could say a deal is close just yet, because the Iranians were supposed to maybe sign off on this text, and it sounded like they gave responses. So it does seem like there's still a lot of negotiating to go down the line.
Well, and there's been a lot of negotiating that's happened already. They've been trying to reach a new deal for some time now, and yet it seems that the continual things standing in the way are the same things that always have, long-standing hurdles that are still there.
And Goldman Sachs says maybe just the state of negotiation in itself is mutually beneficial for both sides. The biggest issues are going to be what the Iranians want is the U.S. to put this ironclad that if a new administration comes in, if it's a Republican, they cannot withdraw. And Mohammad Morandi, this Iranian who's on the nuclear deal talks, says that the U.S. needs to pay a price if they pull out. So they want to make it really difficult for the United States to pull out. The other big hurdle that has always been in the way, but there's been reports that potentially Iran has started to back away from that, is that the Islamic Revolutionary Guard be taken off the terror list. Maybe they've capitulated on that, but they certainly have not capitulated on the fact that they want this to be legal text. So say there's a Republican president, they can't withdraw the way the former president did in 2018.
Okay, yeah, the extent to which you can bind a future administration. Really interesting point there. Bloomberg's Anne-Marie, thank you very much for the update. Now, it is the first big leadership shuffle at Credit Suisse under the new CEO, Ulrich Körner. He's named Deutsche Bank's treasurer, Dixit Joshi, as CFO, and Francesca McDonough has been promoted to operating chief. Körner is trying to turn around Credit Suisse and has promised a restructuring plan for the investment bank by November. Tom Metcalf joins us, Bloomberg finance editor. Tom, what can we read into these changes? It's not the first management reshuffle we've seen at Credit Suisse in recent years.
No, but really interesting, and I think particularly the appointment of the CFO is a bit of a coup for the banks. They're very well regarded, and I'm sure they're probably quite happy as someone sort of seen as a safe pair of hands they're able to bring in. And the other point from the reshuffle is Francesca McDonough, as you say. She hasn't even started at the bank. She's already been promoted, so now she's COO.
Was at Bank of Ireland, of course. Talked to her many times.
Exactly. So I think, they're looking to tap that experience, and what's interesting there perhaps is, hey, she is mainly a retail wealth banker by experience. So that's a good sign, again, of where they're looking to focus their attention on.
Tom, what about the investment bank? Has there been any impact on the plans there?
Yeah, we had a really interesting deep dive on sort of the what they're likely to do to it. And I think these appointments won't really impact those plans, which are basically really strip it back, go to advisory-led, cut back on the capital use. So I think, that's going to be led really by the CEO and the chairman. So I think these new appointments are much more in terms of, again, a strong bench of executives in place and hopefully, again, reassuring investors on the sort of retail wealth side of things.
Tom, all right, thank you very much.
Indeed, thank you. And of course, we'll have more, Anna, on that Credit Suisse story. It is the topic of our latest big take as investment bankers expect to draw a dramatic shrinking of their business. So we will be discussing that later this hour. And of course, you can find that on the terminal and on Bloomberg.com. Meanwhile, one other story that caught my eye today, the debut of the prequel to Game of Thrones overwhelms the HBO Max streaming service in the U.S. More than 3,000 outages were reported across the global monitoring service Down Detector at 9 p.m. New York time, just as House of the Dragon was released. The new series premiered more than 3 years after the last episode of Game of Thrones, which drew more than 19 million viewers. I have to say, I myself was one of them. I loved that show. But let's see how that's translating into pre-market trading for Warner Brothers Discovery in early hours. It is down, though it is not necessarily underperforming the broader market, given that futures are pretty dramatically lower today. It's down by about 1%. It is a much bigger decline, though, for one of the favorite meme stocks that maybe is no more, as we're seeing some deflation of that trade. AMC is down 35% in early hours, though that in part may be due to the fact that its preferred stock, APE, is going to be trading on the New York Stock Exchange starting today. And it is a big move higher for one company, Signify. This is a home health company, and Bloomberg reporting overnight that bidders potentially for the company include United Health as well as Amazon. United Health, according to our reporting, set to offer a little more than $30 a share. Amazon's offer apparently pretty close to that, maybe just below. But as a result, the stock is trading at $28.50 a share, up about 34% before the bell, Anna.
Certainly one to watch then, Kaylee. Coming up on the program, Freya Beamish joins us, head of macro research at TS Lombard. What does she make of inflationary pressures around the world? This is Bloomberg.
make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. We're simulcast on TV and radio. Let's talk about one of the hot topics this week. It's going to be all about the Federal Reserve. Big surprise there. But it's also going to be about what they're going to do about financial conditions. Remember, we have actually seen financial conditions tighten quite a bit since the start of the war in Ukraine. For our TV audience, you can see the chart. For our radio audience, what you need to know really is financial conditions have tightened more and more until July. You saw this massive reversal in the stock market where you did actually see it actually pushing financial conditions higher. Remember, a weaker dollar has also played into that story. The question is, how much room does it actually give the Federal Reserve? Do they really need to do anything about it? Or is the market actually readjusting and really assimilating to the new market dynamics? Let's ask Phil Serafino, a senior markets editor for Bloomberg. He joins us now from Paris. Phil, what do you make of all this?
You know, you have to think that the Fed probably doesn't want to see financial conditions getting looser going into the fall. You know, their goal is to cool the economy down, and the stock market, frankly, is pricing in good times ahead. You know, investors are assuming the Fed is going to succeed in cooling inflation, slowing the economy a little bit, but not tipping it into a recession. If you look at the market since mid-June when it started rallying, all 11 sectors of the S&P 500 are up. Consumer discretionary stocks are leading the way. That's like autos, retailers, casinos, hotels. That doesn't sound like a cooling economy. So, you know, the financial conditions are saying, hey, things aren't so bad. And the Fed definitely wants to cool things down a little bit.
Phil, good morning. Does that mean we are expecting, well, we're primed for good news and could be wrong-footed by bad news? And we'll have some key data points out from the US, of course, in early September.
Yeah, absolutely. I mean, the market is assuming, again, that everything goes just right. And the Fed, I think, has been pretty clear that they'll do what's necessary to cool inflation. Investors over the past couple months, though, have looked at every economic point, every statement by the Fed, and assumed the best possible outcome, that the Fed won't go too far. So, you know, you've got Jackson Hole, Jay Powell on Friday might want to send a message. And then, as you said, in early September, we've got the jobs report in the U.S. and CPI data coming in the middle of the month before the Fed meeting later in the month. So, I mean, there's a lot riding on those data points for the market.
Phil, thanks very much for the update. Bloomberg's Phil Serafino there with the latest on market moves ahead of Jackson Hole and the speech we're going to get from Jerome Powell there. For more on the market, for analysis, check out MLIV Go on your Bloomberg terminal. That is the Markets Live blog. This is Bloomberg.
covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Kriti Gupta in New York and Anna Edwards in London. Matt Miller is off today. Now, keeping you up to date with news from around the world, here's the first word. Since the start of the war in Ukraine, China has increased its purchases of energy from Russia. According to the latest customs figures, spending on oil, coal, and gas has risen from $20 billion a year ago to $35 billion. That increase comes as other countries shun Russian goods as punishment for the invasion. Meanwhile, Germany may have to extend its use of nuclear power if it's not able to replace all of its imports of Russian natural gas this winter. Berlin had decided to exit atomic energy permanently by the end of the year, but Chancellor Olaf Scholz and Economy Minister Robert Habeck said that there's the option of extending the lives of Germany's last 3 reactors past December. The U.S. and South Korea have begun their biggest joint military exercise in about 5 years. That's after taking a break on large-scale drills failed to lead to North Korea's Kim Jong-un to make concessions in disarmament talks. The exercise will involve thousands of troops and will stimulate a response to an invasion from North Korea. In the UK, Rishi Sunak has told the frontrunner to be the next prime minister that she has a choice to make. Sunak says Liz Truss can either deliver support for struggling British households this winter, or she can stick to her policy of tax cuts. He is pledging for more direct aid. And of course, Anna, it's a tough picture for fiscal policymakers in the UK and monetary policymakers as well.
Yeah, absolutely. The fiscal focus not made any easier by the fact that we are witnessing a leadership context and the decision still to be made about who becomes the next UK Prime Minister. Coming up, we'll talk about global macro. Freya Bremish joins us from TS Lombard. This is Bloomberg.
700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
what happens politically and then what the economic fallout is.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China tries to fix a worsening housing crisis. Banks lower their benchmark lending rates while the government steps up support for the property sector. Walkout. 2,000 dock workers began an 8-day strike at the UK's busiest port for container ships. They rejected a contract offer as inadequate. And a shake-up at Credit Suisse. There will be a new CFO and operations chief. All this as the Swiss lender prepares for a major restructuring of its struggling investment bank. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons in New York. Matt Miller is off today. Kriti, US futures then under pressure. European stocks, risk assets more broadly under pressure. Higher energy costs here in Europe, the focus. What's in focus ahead of the US Open?
Yeah, well, it seems like pulling out of the stock market, or at least equities as an asset class, is really the story globally. And you can see that really right at the top, Anna, as you mentioned, the future story down 1.2% in pre-market trading, even yields kind of unchanged, even though you did see some intraday volatility earlier in the Asian session. But I really think the dollar is the story here, because remember, those inverse correlations that you see between the dollar and the commodity space is also just as strong in dollar versus the stock space. And that seems to be the theme as well. Bloomberg Dollar Index up about 0.2%. But once again, it really is that risk-off story that you can even see in Bitcoin futures down 1.5%, Kaylee.
Yeah, and a lot of declines for Bitcoin over Friday and Saturday as well. So perhaps no surprise, crypto-related equities aren't doing so well in pre-market trading today. The likes of Marathon Digital and Coinbase, the big crypto exchange, are each lower in the ballpark of 3 to 4%. You're also seeing some air come out of other speculative areas of the equity market, like those meme stocks, including AMC, which actually its preferred stock, APE, will begin trading on the New York Stock Exchange today. So that in part may be what is weighing heavily on the shares this morning, down 34% before the bell. And of course, for Bed Bath & Beyond, which caught all of our attention in recent weeks, it fell 50% between Thursday and Friday. It is adding to those losses today, down nearly 10% before the bell, Anna.
Kaylee, European stocks under pressure today. We've got weakness across European equity markets. There we go. Stocks Europe 600 down by 1.2%. In particular, France and Paris, of the major markets, coming under some pressure. And a lot of this has to do with higher energy prices. This is the European benchmark in euros per megawatt hour, 14.5% higher. And that is just in today's trading. The catalyst for this, Russia saying it needs to do another 3 days of maintenance on that one turbine that's functioning through the Nord Stream pipeline. So that will happen at the end of this month. That raises questions about whether flows get turned back on. We're back to having that conversation again. And so Germany searches for alternatives in the meantime. The euro is responding to the same story. We went below parity briefly a little bit earlier on, an hour or so ago, but now at 1.0005, 0.3% weaker for the euro against the US dollar. Are we going to be talking, in the words of Nomura, are we going to be talking about blackouts around Europe periodically over the winter? And that's going to be something that will weigh on the currency perhaps. Cineworld is a London-listed operator of cinemas or movie theatres. It operates the Regal chain over in the United States. Nearly 70% of revenues come from the US, and they've said today that they may seek Chapter 11 bankruptcy. Kaylee, you reminded me, of course, that on Friday we saw a really big drop in the share price here of this company. Now sort of bouncing back a little bit from some of that, some of those losses on Friday, but absolutely not making up for those losses on Friday, up by 2.7% today.
Yeah, it doesn't go too far to erase the 58% decline of Friday, but at least it's something, Anna. All right, let's turn back to the broader global economy now. As we await Jackson Hole later on this week, one question seems to be on everyone's minds. Is a recession necessary to rein in inflation? That, of course, is the question from our MLive Pulse survey. Here is how people have responded.
This likely recession that we're heading into is largely supply-driven, supply shortages.
Recession certainly is a potential cure for inflation.
The medicine is probably supply-side related. Supply problems require supply solutions, not something that monetary policy is apt. And so driving a recession is really a poor and suboptimal outcome.
There's no need for central banks to ram a recession down the throat of economies. It's simply do not need rates to be moving higher.
We just need a period of absorbing and also allowing some of those mechanisms to work its way through.
I actually think the U.S. economy can withstand much higher interest rates than I think people give it credit for.
Joining us now to add her voice to that chorus is Freya Beamish, head of macro research at TS Lombard. So, Freya, what do you say? Is a recession required?
Funny, we're almost back to asking that same question that was asked of Margaret Thatcher in the 70s, and her answer was unequivocally the TINA, the original TINA. There is no alternative to a recession to cure inflation. I'd probably add a clause to that, which is if your politicians are not able to deal with the problem through more targeted fiscal spending and taxation, then a recession is necessary to cure inflation. And that's exactly what we see. So the buck gets passed to the central bankers across developed markets, and central bankers have very blunt tools, and therefore it is more likely that you get a recession. But I think there's a slightly flippant answer. If we really look at the dilemma that policymakers and central bankers are facing, it's not one that you would want to foist upon anyone, and it's this type of propensity. If I look at it through the credit prism, I think it becomes clearer, because you do have a need for central bankers to break spirals. If you think of inflation being very high, and therefore real interest rates are very low, and therefore credit demand is perpetuated at a higher growth rate, and that keeps this demand-supply imbalance running, and therefore inflation keeps running, and therefore the real interest rate is not sufficiently constraining. It takes the central bank, in some cases, to step in and raise real interest rates to a level that is constraining, and a recession tends to follow that. So when we get to kind of, go ahead, sorry.
Yeah. No, so a recession tends to follow that. Your view, Freya. You also talk in your notes ahead of our conversation about a mirage of disinflation. So disinflation being a reduced level of inflation, but still seeing price rises year over year, so still seeing inflation. What kind of levels will we disinflate to, do you think, Freya, and why will it be a mirage?
I think what's the key metrics that we're looking to is the core of inflation, and almost the core of inflation. You start to exclude everything, there's nothing left, but that kind of the part of the basket that's driven by wages. Broadly speaking, to give you the numbers, the core inflation rate that we're looking at by sort of Q2 of next year is around 3.5%, with significant risks on either side of that. But the narrative, once we get past this terminal rate for the Fed funds rate, is going to switch to this disinflation story, which has been very much driven by commodities. So if I put that in the bigger context, the bigger picture context of the 2020s, it's almost like a sort of a hawkish sandwich around this mirage of disinflation that we see starting to dominate the narrative in 2023. So in the short term, we see the Fed funds rate will probably have to peak somewhat higher than is currently expected by markets. And then you get this disinflation mirage starting to dominate the narrative, but that really only gives you a better entry point for the reality of the remainder of the 2020s, which we think is that there will be higher inflation on average over that period than there was over the 2010s. And in the case of the US and maybe even the euro area, you probably get a bit higher growth as well. The implication of that being higher yields, Fed acceptance of higher wage growth and therefore a steeper curve, but also lower valuations go hand in hand with that as well. So there has to be some kind of a market capitulation as it becomes clear that this mirage of disinflation is in fact a mirage as you move through from 23 into 24, and you get the final kind of reckoning that inflation is actually going to settle higher than the post-global financial crisis cycle.
Freya, at the beginning of the segment, you made a Margaret Thatcher reference that I absolutely adore. Let's stick with that time frame here because so many parallels have been made in terms of the energy story of now to the energy story of the 70s. I'm curious of what follows. Are we in for an 80s-like dynamic?
This is one of the reasons why we think inflation is going to be higher and not in a benign way. So most of the time you think inflation is just an out-and-out bad thing. Some inflation, where it redirects income towards the household sector, might actually then somehow cause higher growth. So it's not necessarily a bad thing from a real economy perspective, although it does have a negative connotation for valuations. But what's more outright negative, coming back to your question, is the threat of continued supply shocks. And it certainly seems like we've deteriorated in terms of the geopolitical backdrop. If we look at the CAPE, and this is really analysis that my predecessor at TS Lombard, Charles Dumas, put together. If we look at cyclically adjusted PE ratios, they do actually mean revert over geopolitical periods. So over the post-1989 fall of the Berlin Wall period, we have cyclically adjusted PE ratios in the region of 25. In the short 20th century, where you did have the Cold War and you had more of these supply-side driven shocks in that period, you also had 2 world wars. So hopefully not going back to a 13 cyclically adjusted PE ratio as we did in that period. But the presence of those shocks on the supply side is likely to be more prevalent. Okay. We can't say when they're going to happen, but that does pose a threat in terms of cost push inflation and a deterioration of valuations.
With that in mind, then, should we expect mean reversion, Freya? Are we in a different era now?
I think we are. I think we're entering an era where we're in a kind of a containment 2.0. We've got a greater threat of supply side shocks from that side. We've also got a greater threat of supply side shocks from climate crisis and the actual move towards net zero itself, whereby resources are used in order to reduce greenhouse gas emissions, but not necessarily to expand the productive capacity of the capital stock. And therefore, that's an inflationary environment as well. So all of these things point to greater kind of cost push inflation, which is more kind of stagflationary, with the saving grace that I do think that there are shifts in the global labor market, which will allow developed market wage growth to return in a way that it just was not present in the period since China joined the WTO in 2001, and that will entail a rebalancing, a positive rebalancing in growth terms. So that's the sort of saving grace from the real economy perspective, which means that we should be trying to get exposure to the tangible side.
Freya, thanks so much. Thanks for joining us. Freya Beamish of TS Lombard with us with thoughts on inflation. Coming up on this program, we'll get back to the banking sector and the latest news flow there. Credit Suisse is bracing for a brutal carve-up of its investment bank. More from today's big tech story next. This is Bloomberg.
stay. We will never break as the water rises and the mountains shake. Our love will remain. We will never, no, never. We will never, no.
The last 10 years certainly have been bad, very bad for the bank, but you look at the situation today, trades at less than a third of book value.
Yeah.
It still has a robust private wealth business. All they have to do is prevent the investment bank from losing money and get it back to some sort of growth.
That's no small task. David Harrow of Harris Associates speaking with Bloomberg TV on Friday. Meanwhile, Credit Suisse has continued its shakeup of top management, introducing Deutsche Bank's Dixit Joshi as its new CFO while promoting a new chief operating officer. And today's big take focuses on the Swiss lender's emergency restructuring, which will likely deliver deep cuts, potentially signaling the end of the lender's ambitions to be a Wall Street titan. Shonali Bosick, our global finance correspondent, joins us now. So, Shonali, let's first start with the leadership changes we've learned about in the last 24 hours. How does the new CFO kind of fit into the bigger picture here?
Yeah, it's a huge story because Dixit Joshi, this is a homecoming of sorts. He was at Credit Suisse First Boston at some point, and more importantly, he was at Deutsche Bank during its massive transformation. There are a lot of parallels between what happened at Deutsche Bank and what's now happening at Credit Suisse. So what does that entail? Job cuts being one of them, facing higher costs of capital, facing credit rating cuts. All of these things are a difficult thing to navigate, let alone in the middle of a lot of global turmoil and a war in Europe. So this is somebody who has been through it before when it comes to a massive restructuring. Remember, Deutsche Bank had to sell some of its assets. They had to get out of equities trading in a larger way. They had to make a massive headcount reduction, almost a fifth at the time they announced. And so this time around, he is somebody that is being looked on to really navigate those similar changes at Credit Suisse. It will depend on how deep they end up cutting.
Well, let's bring it back to the investment bank here because you've been very vocal, I want to say at least on my show or later in the day, but throughout the day, about how deal volume has fallen off of a cliff. Why is Credit Suisse seemingly a little bit more vulnerable or more exposed to that story than its competitors?
Well, for two reasons. Credit Suisse is actually a massive equity underwriter. They were a huge SPAC underwriter last year, and they're also really big in Asia. Of course, Asia has also been under pressure, and the SPAC market has been pretty non-existent this year. So they're in businesses that have been pressured, as well as leverage finance, huge leverage finance underwriter, and that is another business where they've had to take some losses. But if you look at Credit Suisse, they're actually still a top 10 U.S. M&A advisor or global M&A advisor. They were on mega deals, Broadcom, Intercontinental Exchange. And so the question is, can they sustain that with a lot of brain drain they've had and compensation costs they want to keep under control? Interestingly about the investment bank is they made more money in revenue at the investment bank in the first half of this year, but they lost a lot more money, partially because of compensation expenses and partially because of litigation expenses. We already know about Archegos, and partially because of those mark-to-markets that I've been talking about.
And Shonali, so a lot of issues that the investment bank has come up against of late and a lot of issues still to deal with there. So what kind of investment bank can we expect at Credit Suisse after we've seen all of this upheaval? What does our reporting suggest?
Well, this is what's amazing about the big take that's in Bloomberg today, is that there's not a firm agreement yet on what that looks like. On one hand, you have investment banking being a bit of a ballast when wealth management is also under pressure. However, this is a much more capital-intensive business, especially because Credit Suisse is so big in fixed income and some of those riskier areas that I had been talking about. So tough decisions to be made here. Do they keep parts of the investment bank? And most likely they will keep the parts of the investment bank that serve the wealth management unit the best. Wealthy individuals do M&A deals. They do want to engage in trading. And so how do they right-size that business? Again, kind of similar to what we saw at Deutsche Bank. Do they sell assets? Do they let go of some more staff? And how deep, again, does that cut get?
With all of the questions that are out there, as well as attempts to pull back on costs through compensation, how are they supposed to retain talent?
That's a great question, because we have seen a brain drain for the last couple of years. I have to say something interesting, even though the most recent challenges at Credit Suisse are severe. They certainly are. Remember, they are trading at about a third of book value or less, depending on when you look at it. But they've had a long history of volatility at this investment bank. That's what makes this story so remarkable. Anybody that had any point of contact from Credit Suisse from the first Boston days to 2015 to 2017, when they lost a third of their share at that time. 2018, they still had an ambition to be top 5 in equities trading. They were hiring from Bank of America, from Goldman Sachs. That was just before the pandemic. So
how quickly things change.
How quickly things change. And I think that's what any of the major investment bankers here are saying. Let's not be fickle here. Let's take the longer term view while still paying attention to the fact that this is a capital intensive business. Let's see if we can make it more capital light.
Sonali, thanks very much. Bloomberg's Sonali Basak there with the latest on Credit Suisse. And if you want to read more about that big take story that she referenced, you can do that on Bloomberg.com or by typing NI Big Take into your terminal. This is Bloomberg.
Stronger that moment that you're lifting the barbell, you get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Kruti Gupta in New York and Anna Edwards in London. Matt Miller is off today. But very much in today, Tom Keene, co-anchor of Bloomberg Surveillance, who is joining us now. Tom, what's your single best chart for a Monday morning?
Well, the headline's euro through parity, but it's also a weaker sterling as well. We had a 117 handle on sterling, really showing the energy issues and the difficult war news over the weekend. And I thought I'd take a look at the animal spirit of the United Kingdom. I was shocked at the chart. I really didn't know what to expect. And there it was, the flatlining of the United Kingdom economy in U.S. dollars since 2007. The red circle is the great financial crisis. Down it goes with some real nominal GDP challenge. The 4-year moving average shows the flat line with a little bit of good news recently based on US dollar, but a really distressing chart. If you extrapolate out what the British felt years ago, we now have a 78% shortfall in what used to be the United Kingdom economy. And you go, well, how can that be? And the answer is it was 15 years of malaise that we're dealing with. The length of time is extraordinary.
Yeah, still not really seeing the recovery in some metrics since the financial crisis. So that's one of the things dominating your coverage. Thoughts, of course, on the euro, as you mentioned. Which guests do you have in store to cover
Well, we've
these
got a lot
stories
coming up here to readjust to the market. And, of course, I have David Kostin's note of Goldman Sachs over the weekend. Lori Calvasina will be with us with RBC Capital Markets. A very acute weekend note, as always. And far, far more importantly, we're going to begin to get ready for Jackson Hole. Peter Trubowitz of LSE will join on all going on in Ukraine. And very importantly, Leland Miller will give us an update with his really acute analysis of China. That's one of the themes I'm sure that Jerome Powell will consider on our road to Jackson Hole.
Absolutely, as we saw more stimulus there overnight. Tom Keene, looking forward to the next 3 hours of coverage. Thank you so much. Now, as for what else we're looking forward today, I will be watching for Zoom video earnings after the bell, something, of course, we all got familiar with over the course of the pandemic. But now that more people are back in the office, how is their business really doing, especially if you have businesses pulling back on spending due to a softer macroeconomic environment? The shares are already down 46% year to date. They are hovering around pre-pandemic levels. So could earnings change the trajectory? The street is expecting sales growth of just 9% year on year, which would be an all-time low. So something to keep an eye on after the bell today, Creedy. Well, certainly something to keep an eye on as I want not make a pun here, but zoom out and look at broader markets here. Of course, we are seeing them under pressure. I had to do it. I had to. You're looking at the broader markets under pressure as well. And of course, the concern here is, do you start to see that bear market idea come back into the picture, Anna? We really don't know. Of course, we know there has been some momentum in the stock market recently, but how much of that is really just a question of summer volume and how much of that is really sustainable?
Yeah, certainly coming back after a little bit of time off, those questions around whether that summer rally can be sustained. Well, it certainly looks more doubtful, doesn't it? Today's sentiment pretty weak. Let's have a look at what's going on in the UK then. I'm focused in on the UK strike activity. You know, this week it's Felixstowe ports. Other weeks it's been other parts of the economy, rail, mail services, criminal trial lawyers, and the like. But today we're talking about an 8-day strike at Felixstowe, the biggest container port in the UK. So this is going to have some significance. Clothing, furniture, all kinds of stuff from Asia in particular comes through the Felixstowe port on the east coast of England. We spoke with the union boss on radio who's actually negotiating this, and they've rejected a 7% plus £500 one-off payment. They're looking for something that is more like RPI, a different measure of inflation in the UK, which currently stands at 12.3%. Could there be some room for compromise between the two? That seems to be the summer, the autumn, the fall, the winter perhaps that we're talking about here, those kinds of pay discussions. That is it for the early edition. More surveillance is ahead with Tom, John and Lisa. They have a packed lineup as they build towards that Jackson Hole symposium a little bit later this week. This is Bloomberg.
Anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future?
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
In a $7 trillion industry, there's a lot of ground to cover.
Prepare for an economic hurricane.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We have this situation where growth is slowing, but the Fed is tightening.
The Fed has been very clear. They need to slow the economy down. So the stronger it is now, the more hiking they have.
I believe the Fed targets inflation and believes that by tightening financial conditions, it kind of gets there.
There is an increased probability of a soft landing.
I don't think the Fed's going to be doing much in terms of hikes next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Bramo's back. Literally nothing else matters, Tom. That's
she
it.
hasn't talked to me yet. I haven't even
let's
greeted
try
her.
and fix
Good
that
morning,
now.
Tom. How's it
Lisa's
going?
Back
Oh,
in the
thank you,
seat.
Lisa.
This is a beautiful thing for our audience worldwide.
August.
Good morning, good morning. Futures down 1.2%. TK, the Bears are back.
The Bears are back. It's a real market move day. You're going to have to pay attention, folks. It's not a lazy, sleepy Monday in August. There's some real move. John, I'm going to triangulate right off the top. This is what the pros do. They look at euro dollar, they look at dollar yen, and then they get the other pair, euro yen. And John, it sums up this morning, no surprise, weak euro through parity.
Can we throw European gas into the mix as well, Tom?
That's the why.
As the euro gets sliced and diced, European gas absolutely surging.
And for those, in the laziness of summer, there is a war going on, and it was a challenging weekend, including the bombing in Moscow, John. There's just an overlay here that leads you to a more negative market tone with futures at negative 49.
I said the Bears are back. It's Bramo. Futures down 1%, Lisa. Here we go.
I knew I'd get that. I'd say, I'd come in and people would say, well, the market's down. Of course, you're back. How much are we trying to give positioning a narrative? And I say this because what has changed over the past couple of weeks, other than just people have exhausted some of their short squeeze, and now they go back to the fundamentals, which don't look that great. And I think that really is the story, even as people give Jackson Hole a lot of credit for.
Ben Laidler calling 3 bull markets back to 2019. Good morning, Mr. Laidler at eToro. To push against the Bramo gloom, Laidler says buy select big tech.
Mislav Matejka on board over at JP Morgan, a constructive note this morning from him and the team. Lisa, Max Kettner on your side over at HSBC. Here's the line from him. Our leading cyclical indicators all point to more broad-based weakness in the second half, with warning signs flashing in the housing market, the consumer, and also increasingly the labor markets too.
And he's not alone. I mean, we heard this over at Morgan Stanley over the weekend as well, talking about overweighting cash because it's a real asset class that gives you actual real yield for the first time in a very long time.
Yeah, love that.
An increasing number of people are coming out and saying, look, the Fed is going to push back against this this euphoria about some sort of pause. They're going to do it this week. And then the positioning has to reckon with the fact that earnings have not been that great, even though you've gotten that earnings gain from oil companies in particular.
I missed you, Lisa.
Thank you. I missed you too.
Good. It's good to have you back. I know you didn't, Tom, but I did. and Lisa missed me and not you, and that's a beautiful thing.
Yeah, that's great. You know, you guys are in halls and I'm working here.
We're going to Jackson Hole later this week, Tom.
I am?
Can't wait to share the plane with the two of you. Futures on the S&P down by more than 1% on the S&P 500. On the Nasdaq 100 down by 1.5%. Tom talked about that weakness in the euro. Here you are. Euro dollar briefly breaking through parity once again and clinging onto it right now. Elisa, euro dollar negative 1/3%.
Yeah, and I really find this fascinating. Jordan Rochester, who's going to be on the show later today, talking about how this feels different than the prior foray below parity because the positioning has been washed out and because we are looking at a much more dire situation when it comes to European natural gas. Which brings me to what I'm looking for today. German Chancellor Olaf Scholz going to Canada, meeting with Prime Minister Justin Trudeau. How much will this entirely be about? How much oil Canada can provide? How much gas Canada can provide to Europe? We were talking about natural gas. John, you can see that that has reached a new record high. It has more than doubled since June. And this really speaks to some of the concerns still percolating under the surface when it comes to the commodity space, which also brings me to the Pro-Farmer Midwest Crop Tour. And Tom, I know you're going to laugh and you're going to take out your sheep journal, but this is actually incredibly important. It's essentially an audit of the farming season in the United States. And this is really important because people don't have a sense with all the droughts, with all of the heat waves, of what this reaping will actually be at a time when we're very concerned about the potential output from the Ukrainian and Russian regions. And aftermarket, Zoom Video Communications reports earnings. We have gotten most of the earnings. Zoom is one of the last ones. I just want to give you a sense, John, the round trip here. This is what Zoom has done since the pandemic, surged dramatically, has given up all gains. And we're looking right now at how much potential is there, how much have we gotten ahead of ourselves. This I find fascinating considering the euphoria that people talk about in certain tech stocks. Not all of them. And certainly we've seen some pretty big potholes.
Brutal. Lisa, thank you. And again, fantastic to have Bramo back in a seat as we count you down to Jackson Hole, Wyoming. We'll depart on Wednesday afternoon, and then we get there a little bit later that night. And then, Tom, the coverage begins Thursday morning into Friday.
It's going to be interesting. We've got a great set of guests lined up, really thinking about what global central banks are doing. John, I think we have to remember that Mr. Powell's the focus, but there's a huge international feel to what the Kansas City Fed does there. I love what Kit Juke says this morning as he celebrates Arsenal doing better than good. And it's Juke says the U.S. dollar heads off to Jackson Hole. Do we have a dollar that's resilient, John, and breaks through DXY, 108, 109, 110?
We have a dollar that's strong, I'd say, Tom, and a euro that's a ton weaker this morning. We'll pick up on that theme in a moment. Let's get the week started in a very, very good way. We can do that with Laurie Calvasina, the head of US equity strategy at RBC Capital Markets. Laurie, I saw your latest note, and I think it's an important one to address. Can you establish a major bottom before we've seen the big EPS forecast cuts?
The truth of the matter, John, is, and I keep getting that. I keep getting that question from clients, and it's not only that you can get the market bottom while earnings estimates are coming down, but if you go back and you look at major periods of stress, like the tech bubble, like 2018, like the 2015-2016 industrial recession, that is often the case that the stock market puts in a bottom several months before you actually flip back into positive revision territory. So I'm not sitting here telling you that reducing earnings estimates further isn't going to be a headwind for the market. I think that it is. But in my mind, it's something that causes us to merely retest the June lows, maybe take another swing low at them. But I think we probably did put the low for this cycle in place in June.
Laurie, where is sentiment this morning?
So someone asked me this question last week, and I said, 85% of the people I talked to are still bearish, about 15% are bullish. It did feel like, maybe over the last couple weeks, that bullish cohort grew from about 5 to 15%. But if you look at the CFTC data and just want to get the quantitative read, I think that sentiment in NASDAQ has become euphoric again. Futures positioning is getting close to the highs that we've seen in recent years. But if you look at something like small cap, the Dow futures, or even S&P futures, we are still very much in the early days of recovering off of an extreme low. In the case of small cap and the Dow, off of new lows that were below a great financial crisis lows. So I think it's a bit of a mix. I think there are some pockets of euphoria, but I do think overall positioning has still been pretty depressed, and sentiment reflects that.
Laurie, what's going to drive small caps higher at a time when you see consumer sentiment falling off a cliff and consumer spending, while still resilient, showing signs of weakening pretty much across the board?
So I think the issue with small caps is that they have very clearly baked in a recession at this point in time. We've gone through a bunch of the numbers. What we have seen essentially is that if you look at small caps against jobless claims, they're already baking in a pretty big spike from here, even with the recent move that we've seen up in small cap recently. Small caps are also baking in a trough-like move, a plunge really in ISM manufacturing that hasn't happened yet. It's probably coming. It's baked into the small cap stocks. But I think the other issue that we see is that historically, longer-term investors know that recessions are usually good buying opportunities for small cap. They sniff out the pain early on. They sniff out the recovery early on. And at the end of the day, small cap is really, I think, the one part of the market that has clearly baked in an economic downturn.
Lori, over my break, I was thinking a lot about the talk about reshoring or onshoring a lot of manufacturing from China, from Asia, in response to some of the supply chain disruptions. Is this more talk than action? Are you actually seeing this on the ground with small caps?
So I don't think we're seeing it in a massive way yet, but I will tell you, Lisa, in my recent travels with investors, that issue is something that small cap portfolio managers are highly engaged on and highly focused on, particularly when it comes to the industrial sector. And there is a view out there from professional money managers who specialize in this space that that will ultimately be a good thing for the small cap industrial stocks. It may ultimately be challenging for margins for the bigger cap companies, but there is a view that this is something that's going to be a tailwind for the small cap space and hasn't really played out yet.
Laurie, I've got you at 4,200 year end on the S&P 500. I've got the market on Friday at the close at 4,228. What now? What do you tell clients?
So look, I think that the argument that valuations are too high right now, I think that's kind of a thin argument for saying we got to peak out right now. I do think it's a concerning data point. It reins in my enthusiasm through the end of the year. We're close to 20 times my numbers for next year and this year. But I do think that, you know, these are year-end targets, John. We're trying to guess where the market is going to be on December 31st, not the high it's going to achieve this year. So I do think that we're setting up for further volatility in the very short term, especially if we get favorable messages at the end of the week from Powell. I could see this thing going just a little bit longer, just based on how low and extreme the positioning has been. But I do think if we're being intellectually honest, we have to set up for some choppiness and volatility through the end of the year.
Laurie, awesome. As always, Laurie Cavacina there of RBC Capital Markets. Kicking off our coverage this week, counting you down to that important speech later this week on Friday. Chairman Powell, 10 Eastern time, Tom, from Jackson Hole, Wyoming.
We'll have coverage there with some good guests lined up here. We're getting guests from England as well for the early morning. John, do you realize when we have to get up?
For local, we go on air, Tom. So
we're on air.
Depending on how much time you need.
Well, I'm in makeup at 2 p.m. and the bars close at 1:30.
I don't think you're getting makeup.
So
I don't think you're getting makeup out in that field where that studio is, Tom.
No, but if I'm at the $1 million bar in Jackson Hole,
who do you think's doing your makeup at 2:30 in the morning?
No,
at the lodge.
If I close a $1 million bar in Jackson Hole, I can get makeup there on the way to the.
Are you going to stay up? We call that an all-nighter, Tom. Is that what you're doing?
Well, that's what you have to do.
Lisa,
that's a Jackson Hole tradition.
Lisa, welcome back, because you and I are going to be doing double time later this week when Tom sort of stumbles out of the bar onto the set.
Stumbles out of the bear cave after getting his makeup
Even more
fully
painful, folks, is stumbling off the set into the Pioneer Grill for the Huckleberry pancakes.
Literally.
Okay.
Everyone has
John, it's called a full Wyoming. It's like a full English.
Okay.
Full Wyoming.
Lisa, you sure you want to come back?
I'm here.
You don't want another week off?
Honestly, it's really good to be back, and it's good to take time off as well, partly because you do see some of these other discussions that are being had. Well, you know, maybe you'll find out later this year. I do think that one thing that was really present for me was just how dry everything is. I really am thinking a lot about farming.
You'll go back to your farming roots, aren't you?
I really, this is where it's at right now. I think this is the big story.
We'll pick up on that a little bit later. Lisa's back in a seat. Good news. Alongside Tom Keene, I'm Jonathan Ferro. Futures down by a little more than 1%. Not much good news out there this morning for the equity market bulls. We are lower on the S&P. We are lower on your NASDAQ 100, down by 1.35%. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Traders are betting that Fed policymakers will double down on their hawkish stance at this week's Jackson Hole Symposium. Benchmark 10-year Treasury yields came within a whisker of 3% today. Fed Chair Jerome Powell may use a speech at Jackson Hole on Friday to push back on speculation that interest rates will fall in 2023. In China, the government is trying to alleviate a housing crisis that's getting worse. Banks have lowered their benchmark lending rates and authorities stepped up their support for the property market. That comes days after Beijing said special loans will be offered to ensure stalled property projects are delivered to buyers. And since the start of the war in Ukraine, China has increased its purchases of energy from Russia. According to the latest customs figures, spending on oil, coal and gas has risen from $20 billion a year ago to $35 billion. That increase comes as other countries shun Russian goods as punishment for the invasion. And in the UK, 2,000 dock workers at the port of Felixstowe have gone on strike. It's the country's largest port for handling containerized exports and imports. The workers' union has rejected an 8% wage hike as inadequate. And it's the first big leadership shuffle at Credit Suisse under new CEO Ulrich Körner. He's named Deutsche Bank Treasurer Dixit Joshi as CFO, and Francesca McDonough has been promoted to operating chief. Körner is trying to turn around Credit Suisse and has promised a restructuring plan for the investment bank by November. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
As the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
If China opens up significantly after COVID, there will be more pressure on demand. More pressure on demand means upward pressure on prices. So we're watching what happens globally, but we are doing everything possible to try to stabilize supply and demand to keep those prices coming down.
Jennifer Granholm there, the U.S. Energy Secretary on Fox News over the weekend, live from New York City this morning. Good morning with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures negative 1% on the S&P, on the Nasdaq 100, down by 1.36%. We are off session lows, euro dollar off the lows as well, just about above parity, 100.101 and negative 0.25%. Pretty defensive out there. Yields unchanged on a 10-year, Tom, 296.84 as we race towards Jackson Hole later this week.
Research note of the morning, John, and it wasn't about that goal that Leeds scored with 32 minutes into the game with Chelsea. Worst own goal I've ever seen. John, it was a paper by Ben Nabarro of Oxford and Stanford at Citigroup, out with 18.6% inflation in your United Kingdom, January soonest.
Did I see a 117 handle on sterling this morning, Tom?
Yeah, you did.
118.12 right now. Very briefly, the low 117.82.
For those on radio and TV, that's the statistic of the morning. Citigroup modeling out off energy with the jump in Netherlands nat gas that we see this morning. 18.6% in January is the homework done by Mr. Nabarro over at Citigroup. Right now, we take advantage of the homework that Anne-Marie Horton has done over the years on the continent of Europe, from Moscow on down to Kyiv and on down to Ankara as well. We haven't had a war update in ages, and after the festivities, the tragedies, the battles of the weekend, including, Anne-Marie, this horrific bombing in Moscow, there's a sober tone this Monday morning. I feel like it's the first battle of Manassas, the Civil War. This war's going to be over soon. It's not.
No, it's definitely not. And actually, you have an individual representing Russia in the UN in Geneva telling the Financial Times that they do not expect this to end soon at all. And they're saying that the mediators have really not done their job. And it's an important point because on Wednesday, we have Ukraine's Independence Day. They'll be celebrating, and Zelensky is very concerned about that, thinking that Russia is going to have some cruel actions. But also, it marks 6 months of this war that is not ending, that is still raging on, and many are concerned that, like in the past, there's been fighting in the eastern part of Ukraine for the past 8-9 years, that this will continue, and that's the outlook.
For our American audience on radio and television, are we funding Ukraine with military material alone? Are we alone in this?
No, but we're the biggest. We are certainly the biggest, but it has been a collective effort across NATO. And you see that across a number of countries in Western Europe, wanting to make sure, especially some of those old Soviet-era military equipment that the Ukrainians are used to using that don't need to be retrained on, as opposed to some of this new American material, that is going into Ukraine. And you see them using it.
Anne-Marie, how does the explosion in Moscow that killed the daughter of a major advisor to Vladimir Putin change the conversation, even as Ukraine says we had nothing to do with it?
Yeah, Ukraine is denying it. You obviously have Russia pointing the finger to Kiev and saying that this is at their hands. I think it just is reminiscent of what you saw in Russia in the 1990s, which was there was lots of bombings, lots of car bombings. And then, of course, when you have the reign of President Putin, it's very tightly controlled, and you don't see
a lot of moments like this. It depends on where this is coming from, but it likely would have sent some chills through the Kremlin. This is an individual, Alexander Dugin, who doesn't have a ton of influence directly, but Putin has quoted him before. He is a staunch supporter, this individual, which his daughter was killed, and he was supposed to be in that car. He's a staunch supporter of Russia sending troops into Ukraine, and this political, social, religious idea that all ethnic Russians around the world should be united.
Well, in the meantime, Russia is pausing production or pausing some of the transportation of natural gas once again on Nord Stream 1. This is leading to renewed concerns and part of the reason why you're seeing that surge in natural gas prices yet again in the Euro region. How far are they willing to go? What is behind the latest stop, start, and is this going to be what to expect for the rest of the year?
I mean, there are times when these pipelines do need to go down for maintenance, right? And this says it's supposed to be a 3-day maintenance, but it's very clear that Putin has been using gasoline, has been using natural gas, has been using oil, and he plays politics with it. You know, Halima Croft once said Putin does never let a good crisis go to waste. He thinks this is his only point to have leverage against the Europeans. And the Europeans are obviously incredibly concerned. We're coming off the summer, we're going into the winter. They are already telling their populations they need to conserve energy. And this would be incredibly worrisome for Germany because Nord Stream 1 is really how they get their natural gas. And you had Habeck over the weekend telling local broadcasters that, again, please start conserving that energy.
What is the distinction that over the last number of days we or Ukraine have focused on Crimea? Is the United States at war with Moscow?
Economically, the Russians would say, yes, this is an economic war, but the United States says this would just be penalties.
But we're providing sophisticated missiles that go a long way, I believe. I'm speaking as an amateur.
Right, the United States would say they are providing defensive weapons, but this is a big debate. Russia believes that they are at war with all of NATO.
Hey, mate, good to have you in New York. Anne-Marie Hordan.
She's in New York?
She's in New York. She's next to you, sir. She's about 10 feet away.
He missed me.
Run away, Anne-Marie. Run away. TK, this one's for you. Explain to Keane that was not an own goal, please. It was a goal by an American, Aronson. It was actually a goal by an American for an American manager, Jesse Marsh. Very cool.
It looked like I was playing goal. How much is that goalie paid to put that in? Folks, they're standing there.
Edouard Mendy.
It looked like me playing.
Tommy's a big guy. He's a big guy, and the problem is they're under so much pressure from the manager to play it out from the back that the goalkeepers can't do what they used to do, which is just kick it as hard as they can up the field.
John, is it modern that when they score, they go up to the fans? I love that they do that versus the distance of the athletes in America.
They've been doing that for a long, long time.
They've been doing that for a long time.
Very, very cool. But the Premiership fans get so close to the players on the field.
I don't even know who's playing. I mean, I can't figure out.
That's a lie. I know that you watch all the games over the weekend.
Each team has like 4 uniforms.
What do you mean, Tom?
The kit thing?
Oh, right, yeah.
I don't even know who's playing.
An away kit, and then you have a third.
Thank God Chelsea was in blue. I could actually figure out who they were.
Bramo, did you watch anything over the weekend?
No.
No.
Okay. I'm sorry. I'm just looking
at it. Can we have a discussion
Journal?
The Farm
I'm
Journal.
telling you, the Farm Journal was where it was at. Go on, Tom.
No, the Farm Journal thing was good, Bramo. It's good. Can we have a discussion? Anne-Marie, chime in here. This is important.
Thing ever.
Should I waste time watching the new Game of Thrones? I mean, this is a serious question.
Oh, the prequel.
You've never seen the original Game of Thrones?
It's too much time.
American.
It's too much time. I have to commit.
No wonder you're so weird.
Did you just call Chief White House
She's
correspondent
never seen Game of
weird?
Thrones?
It's too much commitment
so
now.
Endearing.
Wow. Welcome to New York, Anne-Marie.
Should I see the new one? Help me here. Yes. David says yes.
Keep digging, Tom. Keep digging. You're done. From New York, this is Bloomberg.